All right, what's going on, family? Peace, power, and profit. What is happening, everyone, on this way back Wednesday, hump day, right? Whatever you want to call it. Really doesn't even really matter with this hump day stuff because we ain't really humping worth nothing. Right, not on the job. For most people, obviously, unless you are an essential worker or whatever. But again, just want to extend it, again, warm welcome to everybody. Hope everybody's having a great day. Hope everybody's, again, making the best use of their time while we are positioning ourselves to, again, get back into this so-called opened up economy. That is, some states are already opening, like I said on the last previous live stream we done, and others are slated to open up again May 1st, and then some consequently after that. I think was May 15th, May 18th, something like that, and then into June. So for the most part, again, it's been a very interesting, moment to kind of watch how the country, I should say, excuse me. I was about to say company, right? That's basically what I was need to say anyway, because obviously America is a corporation. But basically how it's been faring and how it has dealt with this coronavirus, over the past month. We can say unequivocally, we had an entire month worth of reflection sitting at the house, whatever, trying to figure out, how this global outlook will be, pending us going back to our respective places of work or just out in the public generally, right? Just getting back to some kind of form of normalcy, as they would say, right? But we know that's not going to happen at the level that a lot of people would love for it to happen. You're not just going to walk out your house tomorrow, and then the sun's going to be up and everybody is going to be, coronavirus free. Uh, but with that being said, people are willing to take that chance, that risk, to say that they're prepared enough to be able to go out there in the general public and protect themselves best they know how. I guess that being masks, gloves, whatever the case. Some people may not even wear none of it because they don't necessarily believe in the coronavirus as a serious virus. So you're going to have a lot of conflicting views and aspects of how people are going to interact or mingle around other people during this virus. So me personally, I would just say, just for what it's worth, protect yourself. I don't know what that really entails for some of you guys, whether you found it serious or not, but just protect yourself, right? Everybody may not have the information you may have or the science that you may have researched or whatever the case. Just protect yourself, right? Because again, there are less vulnerable people who will still be subjected to being, again, crippled by this virus, right? So that's important. It's important to always say that, right? Because again, everybody's not strong and built like a machine, athletic and all that, and whatever the case. So just be careful. All right. So that being said, again, we got a few family that came through already. What's going on, family? Jad Master in the house, right? What's going on, family? Raul, peace, power, profit to you, family. What's going on, Open Brandon Jefferson in the house as well. I see my family Robert Rouse in the house as well. My family GPJ in the house. What's going on, fam? Peace, power, and profit to you. Oba Chris Woods in the house. What's going on, Oba? Peace, power, and profit to you. What's going on, family Chavez? See you in the house as always, too, family. Peace, power, and profit to you. We have my family Timothy Parker just came through. Thank you for coming through today, family. Peace, power, and profit to you as well. Hope you guys will get to the bag. If not, strategizing and figuring out a way to get the bag, right? Because that's basically what we're reduced to at this point in the game. With a lot of these companies and the businesses are shut down. Some may not even reopen again. It's just a lot of uncertainty surrounding our day-to-day life choices and our livelihood, so to speak. Just call it call it for what it is. A lot of us are going to be, trying to figure out other ways to, again, make better use of our talents and our times going forward. Being that, the coronavirus really kind of, took a lot of chinks out of the armor of the so-called quote unquote great economy, right? Right. So I've always kind of, watched things at a point where, if they're going to keep talking about this being a booming economy and everything's so great and we're so strong. I mean, we literally were sat down by the entire, 3 weeks to a month at most, and everything just out of control all of a sudden. Right? Everybody ain't got no money all of a sudden. Everybody, need a bailout all of a sudden. All of a sudden the government can't function properly now. But again, before that, it was all that, we had a great economy. Everything was booming, best economy on the planet, and couldn't even weather a 2 or 3 week sit down. right? So I guess that, there goes that talking point, right? They just pretty much, boomerang dagger their own self in that perspective. So, but again, you know, for us, we just see it as signs to better protect ourselves again when it comes to our investment values, our portfolio values, how we should go about looking at the market from a strategic perspective, and also you know for those kind of one-off opportunities that may arise because of the fact that everybody's still trying to scramble to come up with some kind of value of a backstop, right? A therapeutic medicine, vaccine, drug, whatever, to put people more at ease to want to go out in the general public, right? So today, again, I'm pretty sure you guys saw the news like I did, this whole issue with the Gilead, right? Gilead being, a supposed um, drug. It's not even a vaccine. It's not even really a true medication value. It's just more of a therapeutic in some cases, even though it's a drug. But either way, they had a news article that they put out today, or a press release, whatever. The government, what's interesting about that particular press release, it was very funny the way they did it, right? We know it was all about, them trying to get the market optimistic before the market opened up, right? So you had the government put out a press release, then turned around. The company also put out their own independent press release, considering their, remdesivir drug, whatever, that's supposed to be going through some clinical phase trials at this point, and it was showing some kind of level of efficacy, excuse me, considering that it was able to kind of, help those who are very, very, stricken by the coronavirus from a respiratory perspective. And again, they waited literally right before, the CNBC headline where they was going to release the GDP numbers for this particular scenario, this quarter, to drop that news, right? Again, it was very, very, I'm not going to call it strange, I'll call it what it is. It was very strategic in a pump and dump fashion to try to get the market excited about, this so-called drug that was already kind of known for what it was going to do. And it wasn't even that big of a scenario because it's not a vaccine, it's just a drug to help people in the emergency room situation when they come in and everybody's waiting to get a ventilator if they need one, this, that, and the third. At least they got that drug if it passes, even if it passes, that they can rely on. So it wasn't even no more than just, hey, we're still working on it. And again, a excuse, a timely excuse for them to drop that press release right before they dropped those horrible, horrible GDP numbers for this particular, quarter that just passed, right? So again, and knowing that, that there's always going to be some kind of form of, you know, uh, attempt by the markets, by the powers that be, or whatever the case, who are, in a position to affect the market, right? We say market manipulation. Some people say, again, they just outright pumping it. They're looking for reason to kind of keep the market optimistic, keep it, rising as it has been over the past literally month. Off its March lows, March 18th, March 19th, the market has been steady in a constant incline, right? As if nothing has ever happened. The coronavirus was just kind of, a one-off situation where it just kind of came through, you know, all right, guys, sorry about that. I'm back. Crazy behind computer, right? All right, so let's see here. Now I have to stop. Yeah, I froze for a second. My internet was cycling out. Crazy behind connection here. So I think I'm back here. Can you guys hear me? I think you guys can hear me now. So now I got to figure out which screen is. Let me take that one out. Okay. All right, there we go. All right, guys. I think we're back. Sorry about that, guys. Hey, My computer might have caught a virus too, right? You know, my computer got a virus. Somebody threw me a little virus over here, maybe. Hey, what's going on, family? Kamari, what's going on, family? Peace, power, and profit to you guys. All right, peace, power, and profit to you as well, family. All right, so yeah, what's going on, Overseas? See you in the house, family. What's going on? Peace, power, and profit to you as well. Thank you guys again for stopping by. All right, just getting ready to try to set my little screen up so I can speak on this Gilead drug real quick and do a quick little rundown before we get ready to move into this FOMC meeting, right, which is coming out at the 2:30 or 2 o'clock hour. Very important federal meeting. Not that they're going to say anything new that we probably don't know. It's about what they may not say in their briefing, in essence, to whether or not they're going to obviously leave interest rates where they are, or are they going to particularly try to lower them another quarter basis points, which obviously at that point will put us at a zero handle, right? A zero handle on the national interest rates, right? So they're already pretty much, at dirt cheap prices, which is great for people who are looking to buy homes, finance cars, take contracts out on being cell phones, whatever the case like that, right? So these are somewhat, very what they call advantageous moments to kind of go and make those kind of power moves if you have the income to be able to withstand it, right? Because again, interest rates being basically down here in the zero level, getting locked in at these levels is phenomenal. So at some point, if they begin to rebound, which is, in my opinion, again, I don't see that happening no time within the next quarter or two. Just too much damage has already been done in this to this coronavirus and the economy being shut down. Well, either way, them lowering these numbers at a point where, again, it's making it very more enticing for people to go out there now to look at and to think about pretty much buying properties or whatever. Again, you can probably, take a little power move here if you got your deck is in order, and still do pretty well in the event that something happens and we hit another wave of this coronavirus, which they're saying is going to come back in the fall again, kind of like a seasonal flu. Well, at least, at that point, if the economic, aspect of where we're at doesn't improve, which I don't see it improving, but I'm saying them keeping things where they are from this point on, if the Feds don't cut another quarter basis point this particular FOMC meeting, then I think you still be pretty well off having that, the opportunity to kind of go out and maybe refi your existing property that you may have, do a little refinance on those babies. If not, go out there and probably find your nice little fixer upper with low interest rates the way they are, and take a good little leap on that as an investment vehicle too. Right. So again, just talking about Gilead, right? So back to this old Gilead, right? So a lot of people like, man, okay, the news has been great. Why is the stock selling off? It doesn't make sense, right? Again, stock, obviously was at a point where it kind of bounced off the lows anyway, like most stocks did around, the March 18th schema level. And ever since then, again, since the broader market was kind of pumping that back higher, SP 500, the biotech stocks and all those, Gilead kind of got caught in what we consider to be a, prove yourself channel, right? A prove yourself chop zone, so to speak, right? So as you look right here, right, let's just put a couple little bars on this baby, right? Put a couple of bars on it, right? You see this little chop zone here. Oh, excuse me, right? And instantly, what happens here? Oh, let me duplicate that. Excuse me. All right, instantly, what happens here is now it's in a position here where it has to, again, barbecue a mildew. Now, interesting enough, with this news that they just came out with, again, it's just showing that it had a great efficacy showing under the clinical trials that it was put underneath, right? Doesn't necessarily say this FDA approved, for what they're going to use it for. It's already a FDA approved drug for its use case before it became another issue. In terms of the coronavirus that they're trying to now use it for, the same way how they tried to do with the hydroxychloroquine drug, right? That was used for malaria and leukemia, all other things like that. Well, they're trying to do the same thing for this remdesivir. I think it's a remdesivir or something like that. I might have butchered the name a little bit, but either way, they're trying to hope that this be the savior for a lot of the medical community to have another backstop again, and that's to people who are short on ventilators, or as a good preventative help measure when people come into these hospitals that need urgent care and they can't get a ventilator right away, this drug is supposed to help them, again, suppress any kind of abnormal breathing, help their respiratory system, help them be able to stabilize a little bit until they get, that kind of further treatment. So again, it's just a drug. And I hate to kind of put it in that perspective as if it's not necessarily a good thing too. It is. All right. I guess if a person that's, in that situation, having to make a life or death decision, whether or not they want to take some or just kind of go with the idea that, the ventilator will do this part. And then you go through, you basic stuff like an IV bag, a saline IV bag, and any kind of, antibody that they can obviously offer you to try to help, the same way they do like a person, dealing with the flu. All right. So again, just long story short, so the stock bounced basically here, right off this, $78 handle. Hold up, I'm in the wrong stock. I'm over here in GILD. And why y'all didn't tell me I was in the wrong stock? Shame on y'all, right? Shame on y'all. I was like, hold up, that don't look right because Gilead is up. Right? Why is it looking like it's still down? All right. All right. So again, forgive me, guys. Let me get over to the real one, right? Like, God, dog, what was happening there, right? All right. Let's see if what we got here on this little trend here. All right, let's see what we got on the little trend line there. All right, so you got a little. We'll do it off that point there. All right, just as a makeshift little. All right, hold up. Let me make this smaller too. Sorry. Bring this down a little bit here. On top of that there. Use the top of this little channel, so to speak, at the top of the camera there. All right. But yeah, but again, even looking at my linear regression band gives you a more accurate reading. This little blue, I'm just getting this purple and this red. I'm just using it as a base point at this point here when it seemed like it really just kind of picked up and got above this 20-day moving average here, which is red line. And then it kind of, traversed itself to the upside from there. And just using this as a makeshift channel to kind of show you where it's at. It's locked into this little uptrend channel. And it's pinging back up, up against the top, pulling back down close to the bottom, getting another press release again, pumps it right back up. And it's trying to stay, again, in a constant, drift to the upside, which is still, again, a solid, show of strength coming off the lows here around, again, just January 31st before even the coronavirus, major aspect of the news became a real big headwind in America. But when it really became obvious that, we were, headed, to something that was very, dangerous for the overall, citizens and all this, that, and the third, whatever, the drug obviously, or the company, I should say, excuse me, got a nice little boost off it because they were obviously named one of the companies that were looking to try to find a remedy for the coronavirus, right? So it took off basically from around about $66 a share, got a ping up near this point here around about 78. Been at that 78 point for a good little moment, actually, to be exact. It's kind of pinging back and forth near it on average. Matter of fact, let's do another line on there. Just kind of show you exactly what I'm talking about here. It's just been riding that $7-8 handle, for quite some time now. And, now it's back above it again with this this new press release that it just put out about Gilead. But interesting enough about this, the stock isn't really doing what people would think it would do in relation to some of these other stocks that have had, lesser news than that of what Gilead is putting out, right? Because now you got the government has a vested interest in Gilead, right? You have the country that's looking at this company as a somewhat of a savior to the broader scheme of things when it comes to coronavirus, and giving them some little value of normalcy if they ever was faced in a situation where they needed some kind of value of therapy or drug. Right, Gilead is kind of being that name that's being championed and marketed across the airways. Right now, again, we see smaller cap stocks that are mid cap, whatever, that are somewhat still trying to do the same thing to a degree. I mean, you got stocks like mRNA, INO, and others who are also in the fight to come up with actually a vaccine, which is the real coup d'etat, so to speak, in terms of what they really need to kind of really combat the coronavirus, more so just than a drug to kind of keep you stable. But the stock ain't really did no explosive moves, right? Since it took off from its, lows around about the $66 level back on February the 20th. And so, people are like, well, how is this even possible? I mean, again, it still picked up a good little bag today. Again, it went from 78, up this high near 85. I mean, you picked up around about $7 a share, $6 a share. It's not bad for, a day worth of trading, from this perspective. But Gilead technically doesn't make those kind of major, big, explosive, low float kind of moves that you see in some of these smaller biotech stocks, like a AXSM, right? I mean, when that stock was trading at like $7, $8 a share, and now it was up $100 a share, in around about a year, right? So you're like, well, man, why is it taking off like those? Because of the fact that number one, it has a heavier float. Number two, market makers are doing, what they should do to the broader market at this point, where they're not, because again, they're just allowing any kind of pump and dump headline to kind of control the market and run it higher. But it's moving in a methodical fashion in a nice little uptrend, with a decent amount of little value of volume, some good, decent, somewhat quote unquote catalysts, which are coming out with these press releases. And the stock is again just pinging up against this channel back and forth on this linear regression band, and also this one I'm just showing you here. But I'll just throw in there real quick to show you where it's at in relation to that drug getting what it really needs to just really take the stock to the next level. And that is, it needs to have that last phase tested, and they agree on it that they now going to use it for coronavirus as a again a additive value. And helping people who may need it when they come into the emergency rooms, whatever the case like that, to finalize the deal. And from there, I think the stock will break out. Until then, I think just looking at where it's at, this $86, $87 handle resistance is proven to be a a headache for the type of traders who are in it and thinking that why is it not running like these other small little cap stocks, right? It just those stocks just taking off and going everywhere. Right? Why my little stock ain't doing, or why my stock ain't doing that, right? And I'm just using this top of that little wick for as a marker. Not that this 100% accurate to that degree, but just showing exactly where it's at. It's kind of stuck in this little this little top what I call it, top shelf trough from this point here to up here, right? But it is above the median line, which is this this red line in the middle here, as a bullish signal. So anything above this red line here, or at this point here, around $78, which we're showing here, $78.77, right? Whatever, give or take a dollar, it's still in a bullish, a bullish stance. Right? Still in a bullish stance. So the only way this stock falls out of this box, pretty much this entire box here, if they get any kind of other conflicting news. They tried it last week, actually. It's funny too, because this is when the Chinese threw that monkey wrench into the Gilead plan. The WHO and the Chinese said that the Gilead drug was not, again, I repeat, not that much of a help in dealing with people who had the coronavirus, as a again, a remediator or a mediator to helping them, be able to function, right? And that was kind of like a dagger, to the company in that perspective. And the stock obviously plummeted, right? It dropped, not necessarily a big plummet, but it dropped, from up into the highs at $86 a share, all the way down to around about that 74, 70, 76, somewhere around there. It picked up and got back up and came back down a little lower here. I think that happened on what? That was on 23rd. Was it on 23rd? I could be wrong. It's one of those days. You go look up that WHO article in the Chinese that they put out. It was either on April the 23rd or it was back on the 17th. I forgot which day it was. But either way, that was the day when it dropped bad. I think it might have been this day, the 23rd, when it came from 84 and came all the way down to like 74. It dropped like $10. That was the day. Actually, what it was. That's what the day it was. It was April 23rd. Right, which is that calendar right there. All right, but either way, again, it's back above that trend line again, which is this red line in the middle. This level of so-called, support is trending back above that support level. But as of today, again, it's not necessarily holding its gains after it gapped up, nicely from today, which roughly around about $79 and change, up here again near like 85. Hit that high, and now it's kind of pulling back a little bit here going into the close. And I say the close meaning into the 4 o'clock hour. So we'll see if it kind of, stays above the VWAP line, which is the purple line here. It's kind of like fuchsia color purple line. That's the VWAP. If it stays above that or closes above that, that's still a good little bullish signal for maybe some follow through tomorrow. That being that the broader market, meaning the SP 500 is doing pretty well. The biotech, ETLs and things like that, VIB and all the other ones like that are doing pretty well as well. And it should continue to slowly grind a little higher. Grind higher until it gets ready to test that resistance again. Now, if it breaks out above that $86 level, 86, 87, or I would say just 86. If it breaks above 86, then you definitely want to, take your little small position on the scalp if you're already not in the stock. set your stop loss pretty decent, back down to that last particular closing candle where it was the previous day, and see if it can, grow some legs from there, and maybe, stretch out and go out there and test that 90, 90, a little higher level, right? But as of now, it's stuck in purgatory, as we say, right? In this little trend, little box here, this trend line still to the upside, regardless. So your levels of resistance are going to come when you go back and look at the previous chart history back here in 2018 when it was up into this point, up into this price range, as it already eclipsed this point of resistance here, around $7-8. That's why it's become a new support now, right? Old resistance becomes new support once you break above it. So this old level of resistance where it couldn't break out above it, now it becomes the launching pad of support for it to go higher from there, right? So as you can see here, when I was kind of showing that $7-8 level as a support, all this, area up in here, right? Even from this little candle here, even though the chart is like very choppy, right? It's hard to really draw a clean indication of where the stock should be able to launch from. But just looking at it from here, this is the level of support, and it's backed up by, again, going back to this point here where you see there's two big tall peaks right here. This $7-8, $79 area, that's showing that, again, that's a major level of support for this stock because it's been there before, right? Beyond that, then you start looking up here near what? Again, 86, like I was saying, 86, breaking that $86 handle, which is around, around this point right here, right? When it broke out above that here, got up above around about 88, 80, 88, 61, somewhere around there. Back in January of 2018. That becomes that new level, like I said. So if it breaks above that, that's when you want to start looking at 88, above that $86 handle, right? Just something to think about and put in the context. And then, going back to look at the stock, before, when it was having this heyday, then again, he was up here near 121. That was on the time when I think that drug got, the first time that drug got, well, remember a couple of the other drugs. I'm not going to say remdesivir been out for quite a while, if I'm not mistaken, that one drug that they're touting right now. But either way, again, bullets case, best bullets case scenario, if you can get back up here, obviously anywhere above 100, right? And go up there and test the all-time high, which is a little bit around about 122. But as of now, unfortunately, the coronavirus has given this stock new life, and it's now in an uptrend because if you go back to 2017, looking at a high around that same point, around about 84, 85, 86, up here around 88 at the top, it's been stuck in a nasty little chop zone for like 3 or 4 years, like 4 or 5 years, going literally nowhere. I mean, you couldn't make this stuff up. Look at this. I mean, it just went nowhere for an entire year in 2019. Right, 2019, it just went in a straight line, pretty much to, kind of slightly bear flagging to the downside, right? Staying right below its 200-day moving average with this thick yellow line, pinging up against it, pulling back, pinging up against it, pulling back, and now it's finally above it, right? It finally crossed over here, right, on this 200-day moving average, and it's now gotten more, a new lease on life, so to speak, right? A new lease on life. So hence, at this point here where it broke out, got above it at 65, 66, and it hadn't looked back, right? Since then, it's picked up again at roughly around about $20 a share, give or take from that point. And so again, just looking at it for what it's worth, if I had to give my opinion on it, I think it's a solid little investment at this point. Again, if you're willing to kind of stick it out, wait, sit through all the, the chop and the they released the Fed stuff already. I'm over here showing this thing, so that's probably why. Let me see. Hold up. Let me keep the volume up so I can hear. Yeah, so I forgot. I think they're gonna do that 2:30. I could be wrong. I might already miss it. I'm going in. Hey, y'all know I go. Somebody asked about the little company. I'm going in. Right. But yeah, so again, just talking about Gilead again, it's one worth watching. Again, if it breaks out above this $86 level, it could easily go up there and hit 88, which we saw the resistance point around 88.61. From there, it'll probably go out there and test 90. So, but yeah, if you think about investing in the company for a long-term hold, right, or even for a catalyst in essence to this phase trial, aspect of it goes through its particular, timeline, then I think it's worth it, Yeah, but here's your bottom, right? Here's your bottom. This is the stream bottom. At this point, just looking at it from a day-to-day grind, it goes, obviously shows a higher, higher level support as it goes from day to day. But if you just to look at it from a place where, say, if I got in, up around here or anywhere, above the VWAP line, then the first line of support is going to be roughly around about 78. After that, then you're talking about roughly around about 74, right? Just me personally, right? I wouldn't really test all this 72, 71 stuff unless you just really like the company. That would be your last case level of support, or a stop loss to a degree where you'll say, oh, this is where I'm gonna, let that be, my last place. Now, interesting about this, you see right here, the company has earnings, right? It has earnings literally tomorrow. I think after hours, if I'm not mistaken. So that's why the stock today, for some of you guys that also wonder why the stock sold off or isn't really just running up high like it crazy, like any other stock would do when it happens, get that kind of news, is because they have earnings, right? And so hedge funds do what? They ride it up into earnings. Most of them take their, take profit, deflate it a little bit, and try to get back in. The numbers are pretty decent, ride it up higher, right? So a lot of these people are selling into this spike right now. That it's gapping up, but they're selling into it, right? Right? I mean, they taking profit, taking some of their money off the table that was already in way back here at 66 or 70 and stuff like that, right? And so that's why you're having this kind of, this kind of hammer up here, right? Just sitting up here like, man, where all the volume at? Where all the buyers at, right? And it's a red, candle on the daily, even though it gapped up, right? Which is odd. You would think it would be a green, but it's not. So that's because people are selling into it. Right. But anyway, so that's that. Let me get the link, guys. If you guys want to come on. My mistake. There's the link. You guys want to come on the back panel. As I always say, I'm always going to welcome you guys on. Hey, what's going on? A few other people, folks that came through. What's going on, family? Voice of Reason. What's going on over Marquise? What's going on over Zane? See in the house, family. Peace, power, and profit to you, fam. What's going on over T? Let me see here. Okay, yeah. I'm trying to see if I might have missed it. I wasn't sure if I missed it. It might have already. I know they do it typically around about 2 o'clock, 2:15 or 2:30 when they release the FOMC meeting typically, but we'll see. Anyway, so what's going on with everybody again? For all the people that came in, I did not get a chance to acknowledge. What's going on? What's going on, bro Brent? I see you in the house. What's going on, Britt Jack? What's going on over Sunline? What's going on, fam? Peace, power, and profit to you as well. Again, just going in. There's the link if you guys want to come on the back chat or back chat, the panel, right? Discuss a little bit, what you're looking at today, what the market may be, doing as far as exposing itself to you. I know somebody spoke about CAPR. That was one that I also shared with our little Facebook message group that we have. Again, I was able to capture a little bit around about $5 a share, right? And I added into. I got in. I think my first buy was around about like 490ish, right? And then I added to it above like 530ish, right? And it brought my average to around like $5.21, 23 cents. I only bought like 40 shares. I didn't even buy a lot. I only bought like 40 shares. But as you can see here, I mean, it took off. I mean, when the volume started coming in, I was just watching it methodically. The volume started coming in, what you see right now. This is the daily, obviously. Let's put it on the. Let's see what the 30-minute chart look like, because now it's starting to kind of turn over. All right, let's do a little bit more tighter time. So let's do the 5. All right, but again, as you can see here, it gapped up. I had news today, obviously. So again, so you guys probably get a chance to see the news on the stock. Let's pull that up real quick for you guys, so you guys can get a chance to see why this thing was up banging today. Because again, it had this, again, talking about the coronavirus, right? So it has some favorable news here. Let me go over and share my screen real quick on this, so you guys can see the news just in case. Come on, thing. All right. So this is what the news on CAPR. Now I've traded this stock like so many times over the years. Like I've been going way back 2017, right? Small little biotech stock that was just kind of downtrodden for a lot of years. Every now and then to get good news, right? It'll pop and then it'll sell off, right? The stock had a bad habit of not holding its gains. When we say it's not holding its gains, then it'll jump up on good news. and then it'll pretty much, sell off, somewhat, near the end of the day or the next day. So it had a really bad habit of not holding its gain. So hopefully this time around, this news, which is solid, will help it really, take off as to, the type of company that it is, in a way to get, put itself on the map, right? Again, stock that's been traded, heavily over the years as a potential good little biotech breakout stock, given the right opportunity to get exposure. Well, today it got that exposure. Today it got the exposure that it's been waiting to get for a long term. I know one guy that's been trading this in like 2016. One of the guys in one of my other Discord rooms, man, a guy named Like Whoa, just like one of his favorite little biotech stocks, right? And I know right now he's screaming for joy. I'm pretty sure if I go, tag him somewhere and say, hey, you start running today, he probably somewhere drinking a bottle of champagne because the stock, was just, again, downtrodden for a lot of years. But again, he kept the faith in the stock, and it finally broke out. Again, going back, a good little while back, and now being in a position here where it can kind of come back and test some of those old, old highs that it was trading at, even back in 2019, right? So again, kudos to everybody that was able to catch it today. Again, I got me a little bit of it, right? And again, wrote it up from like 523 up until like 8 was the top. So up near 8 where I sold the rest of it. I sold my first batch a little bit over $7.31, and I sold the rest around about $7.97, somewhere around there, right? But the stock ended up going high. It went up to like near $10, right? So one of the scenarios, like, man, you hate to look back and like, dang, man, I should have held a little bit more, right? Instead of selling all of it at that point. But again, y'all know the rule, right? What's the rule? A bird in hand beat one in the bush, right? So always collect the bag above all things. Get that bag first. What's going on, family? Beautiful one. I see you in the house, family. Peace, power, and profit to you today, sister. Hope you're having a great day as well, right? So yeah. So that's the news on CAPR, guys. If you want the news for yourself, the stock is still banging up to the upside. We'll see if it holds throughout the rest of the day. Could potentially even go higher. Based upon the level of this catalyst, right? Because it's a solid news piece today on the drug, right? On the company, right? So again, it crested over $10 a share and went up here near 11 and pulled back, obviously, which is natural, and it's still holding a nice little trend here below the moving averages at this point, but it's still holding above $8. I think, in my opinion, that if it can hold above let's say 8.16, 8.15, 8.10. We'll just say $8 because we know how the little small biotech stocks move like this a lot, right? If it holds above $8, that's a good signal, right? That's a good signal. If it breaks below 8, then yeah, get ready, right? Right, get ready, right? Get ready and good luck, so to speak, right? So again, that's the news on it. Again, as you can see there, they was able to, pretty much they put out some new data on the lead candidate of cap 1002, which is one of their little so-called drugs, whatever, or therapy drugs. It's off-the-shelf cardiac cell therapy in severely ill COVID-19 patients. Because y'all know, dealing with coronavirus, they're saying people who had very, very bad heart conditions or even any kind of underlying heart conditions have been very affected by the coronavirus, right? And so this is somewhat of a stabilizer for people who are having those kind of cardiac issues, where again it can be very useful in dealing and fighting with this coronavirus. And most people say, well, what makes this stock and their little drug important than the Gilead drug, right? So why is Gilead not making this kind of move today? Well, that's just it, because again, a lot of these stocks like they have smaller floats. It was kind of left for dead. And then all of a sudden they put out a news release for people that have been sitting in it for a long time, meaning the short sellers has been shorting these stocks for a long time, just riding it down. They had to kind of hurry up and cover, their short position like right away, which caused the short squeeze. When the short squeeze happens, it's game on, right? Because basically that attracts new buyers to come in. Everybody's scanners start pinging and going off. The stock that's running today, and everybody just, start loading up. And as you can see again, in this aspect, this company, the stock had a nice favorable boost today. Again, well over 200%. Up there near as high as rough around near 300% at the high, right? So again, really, really good day. For CAPR. Oh, I'm sorry. What's going on, over Chris? What's going on, fam? Peace, power, and profit to you, over. All right. So
peace, power, and profit, over.
What's going on? Just looking at some of these little runners here, man, I tell you, this CAPR was, again, that was the breadwinner for the day. For any of the, you guys out there who are, day trading the market or whatever the case, that was definitely a nice play today. And it, again, it held in a way where it didn't, show you any kind of massive flash crashing throughout the day to kind of spook investors out of it. If you were just, really, comfortable in the news that it put out, which it was, again, my opinion, was solid news. I think it's just, okay, they're getting ready to drop the Fed stuff here. All right, let me see. I don't want to miss it. We'll listen in as they're talking about it, basically, but hold up 1 second. Let me see here. Yeah, because they are definitely riding a lot of debt right now. And we'll discuss that too.
I think in fine-tuning the response to this is really on the fiscal side. We need to see better policies to help businesses stay positively by financial markets.
David, he's almost been plaintive in the past, as have other Fed chairs, in asking Congress to come through with fiscal stimulus when it was called for, and help from that side of the government. And now certainly the Fed has gotten that help from the federal government in the form of the PPP program and the other the $2 trillion that was a part of the earlier tranche of money that was out there. And so that part of the rescue has gone on and must please the Fed. They're not alone.
Yes, I think the Fed. Yeah, I think the Fed.
Now, mind you guys, there is a small lag between CNBC on TD Ameritrade, then that of the actual, SP 500. Okay, they're going to drop the news.
David, sorry to jump in, but here's Jay Powell at the podium for the virtual press conference. Let's listen.
Both here in the United States and around the world. The coronavirus outbreak is first and foremost a public health crisis, and the most important response is coming from those in the front lines, in hospitals, emergency services, and care facilities. On behalf of the Federal Reserve, let me express our sincere gratitude to those dedicated.
So let's see if the market jumps off this or it sells off, because today it's up literally on a lot of hot air and bad GDP numbers.
The forceful measures that we as a country are taking to control the spread of the virus have brought much of the economy to an abrupt halt. Many businesses have closed, people have been asked to stay home, and basic social interactions are greatly curtailed. People are putting their lives and livelihoods on hold at significant economic and personal cost. All of us are affected, but the burdens are falling most heavily on those least able to carry them. It is worth remembering that the measures we are taking to contain the virus represent an investment in our individual and collective health. As a society, we should do everything we can to provide relief to those who are suffering for the public good. While many standard economic statistics have yet to catch up with the reality we're experiencing, it's clear that the effects of on the economy are severe. Millions of workers are losing their jobs. Next week's jobs report is expected to show that the unemployment rate, which was at 50-year lows just 2 months ago, has surged into double digits. Household spending has plummeted as people stay home, and measures of consumer sentiment have fallen precipitously. Hotels, airlines, restaurants, department stores, and other retailers have been particularly hard hit. Manufacturing output fell sharply in March and is likely to drop even more rapidly this month, as many factories have temporarily closed. Overall, economic activity will likely drop at an unprecedented rate in the second quarter. Inflation is also being held down, reflecting weaker demand as well as significantly lower energy prices. Both the depth and the duration of the economic downturn are extraordinarily uncertain and will depend in large part on how quickly the virus is brought under control. The severity of the downturn will also depend on the policy actions taken at all levels of government to cushion the blow and to support the recovery when the public health crisis passes. The Federal Reserve's response is guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. We're also committed to using our full range of tools to support the economy in this challenging time. Last month, we quickly lowered our policy interest rate to near zero. We stated then and again today that we expect to maintain interest rates at this level until we're confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals. Of course, lowering interest rates cannot stop the sharp drop in economic activity caused by closures and other forms of social distancing. And low rates will not effectively spur the economy if those rates do not feed through to broader financial conditions or if households and businesses are unable to get credit. The economic disruptions caused by the virus created tremendous strains in some essential financial markets and have impaired the flow of credit in the economy. Without access to credit, families can be forced to cut back on necessities and could lose their homes. Businesses can be forced to downsize or close, resulting in further losses of jobs and incomes and worsening the downturn. Preserving the flow of credit is thus essential for mitigating the damage to the economy and setting the stage for the recovery. We have been taking broad and forceful actions to these ends. To support the flow of credit to households and businesses, foster smooth market functioning, and promote effective transmission of monetary policy to broader financial conditions, we have been purchasing large amounts of Treasury and agency mortgage-backed securities. The markets for these securities play a critical role in the economy, and they came under great stress last month as the scale of economic disruption became clearer and as investors clamored for liquidity. Our purchases have helped market conditions improve substantially in recent weeks. In light of this improvement, we have slowed our pace of purchases. We will continue our purchases of Treasury and agency mortgage-backed securities as needed.
Oh, that's obviously more reverse repo operations that they're doing,
is to preserve
and quantitative easing
and effective policy transmission. The purchases will also foster more accommodative financial conditions. We are also undertaking programs to provide stability to the financial system and to more directly support the flow of credit in the economy for households, for businesses of all sizes, and for state and local governments. These programs benefit the economy by providing financing where it is not otherwise available. In addition, by serving as a backstop to key credit markets, the programs can improve market functioning by increasing the willingness of private lenders to extend credit. Many of these programs rely on emergency lending powers that are available only in very unusual circumstances, such as those we find ourselves in today. We are deploying these lending powers to an unprecedented extent, enabled in large part by the financial backing and support from Congress and the Treasury. We will continue to use these powers forcefully, proactively, and aggressively until we're confident that we are solidly on the road to recovery. I would stress that these are lending powers and not spending powers. The Fed cannot grant money to particular beneficiaries. We can only make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers will benefit from our programs, as will the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend, and to make decisions about where we as a society should direct our collective resources. The CARES Act and other legislation provide direct help to people, businesses, and communities. This direct support can make a critical difference, not just in helping families and businesses in a time of need, but also in limiting long-lasting damage to our economy. At the Fed, we're doing all we can to help American families and businesses weather this difficult period. When the spread of the virus is under control, businesses will reopen and people will come back to work. We will continue to use our tools to assure that the recovery, when it comes, will be as robust as possible. Thank you, and I'll be glad to take your questions.
Gina Smialik.
Hi, Chair Powell. Thanks for taking our questions. You guys have cut rates to zero. You're buying up huge quantities of government debt. I guess the question is, what more can you realistically do to help the economy? Or where do you see a need for Congress to step in?
So let me say that we're committed to using our full range of tools to support the economy in this challenging time. We're going to use them, as I mentioned, forcefully, proactively, and aggressively until we're confident that we're solidly on the road to recovery. And also to assure that that recovery, when it comes, will be as robust as possible. As long as needed, we'll use them. And I would just say we have a number of dimensions on which we can still provide support to the economy. As you know, our credit policies are not subject to a specific dollar limit. They can be expanded as appropriate, and we can do new ones. So we can continue to be part of the answer. Will there be a need to do more, though? I think the answer to that will be yes. I would say Congress has also reacted quite aggressively and strongly with the CARES Act and other laws, several other laws, and that's appropriate. With enhanced unemployment insurance and the Paycheck Protection Program, we've seen an extraordinary, historically large reaction. But I would say that it may well be the case that the economy will need more support from all of us if the recovery is to be a robust one.
Nick,
so notice they keep saying the economy. They're not saying the American people, right?
Thanks.
The American people and the economy are two separate entities in terms of how the Feds look at it.
On Gina's question and ask, what specifically do you think elected officials should consider in order to help return or hasten a stronger return to full employment? And what policy tools did you discuss at your meeting today that might be used to stop a deflationary spiral?
So let me start. I'll take the questions in the order you gave them. So in terms of if I can say legislative priorities, we're not responsible for fiscal policy. Those will be decisions for Congress to make. But I would say that policies that protect workers, businesses, and households from avoidable insolvency, that keep businesses going so that they're able to produce goods and to either hold on to their employees or quickly rehire them, those are going to be key policies. They'll come with a hefty price tag, but we would come out of this event eventually with a stronger economy and with less long-run damage to the economy. So that's a key thing that really.
Now, mind you, we had no organic growth of all of 2019 to a degree. In terms of what we can do, how it really affected our GDP, meaning the overall America's GDP.
Do more on that front.
And now the coronavirus is here is making it even worse for them to make money. These companies
done a lot of thinking about what monetary
policy
policy might
overextended in terms of their stock price value.
A range of
so he's trying to continue to inflate this bubble that the markets are fine, the economy is fine on overblown assets that are up on prices, at prices where it's not warranted.
As you know, we cut
they're not making money.
Lower bound.
It's all federal, pretty much taxpayers' money going into the stock market, the proper stock market, while you, when I say you, meaning average Main Street America goes hungry.
With asset purchases, we're continuing to purchase Treasury securities and agency MBS.
You heard him say nothing about doing something for the American people, meaning giving money back to the American people. And that's what they really supposed to be there for. But their own mandate is to prop up corporate interests. And they've been exposed, right? People are really getting tired of the Federal Reserve anyway. But I'm going to drop a video after this over to show y'all.
Steve Leisman with CNBC. I've got two questions here. First of all, why aren't you announcing or conducting a specific quantitative easing program? And maybe you could explain what the context is now of the purchases that will be made and the amounts that are to come. The second question I have is the Federal Reserve really taking enough risk to help households and businesses here, in that you just said that the programs that are out there may be best for those who are able to repay loans, but so don't you have a series of programs essentially lending only those able to repay, which is essentially helping those who may need it the least? Thank you.
Good question, Steve Lees.
So let me say again, in terms of asset purchases and other measures, we do think our policy stance is appropriate now. We've had discussions, as I've mentioned, over time and done quite a bit of thinking about what we might do in the future. We think for now our policy stance is appropriate. We're not going to change it now. And we're really waiting to see more about the economy. There are ranges.
Basically, that's that stubborn mentality where they're going to do the bidding of corporate interests
and I think
first before they think about doing something for the American Main Street people. Again, it's no secret the Federal Reserve works lock and step for corporate interests,
something we're doing today,
as opposed to what it's supposed to be doing in terms of helping be a backstop to the actual American worker. They want to throw good money at stocks. Assets. Listen to his words, not mine. Assets. Right? They're throwing money at assets.
What are assets? Under the laws that Congress
bonds,
passes.
Muni bonds, mortgage-backed lending bonds, junk bonds. They've been even buying junk bonds lately.
And move into
and then from there, they buy ETFs, giving banks liquidity through the repo reverse operations. In terms of giving them extra liquidity to go out there so they can buy ETFs and other little individual stocks.
In places where we never have, and I'm glad that we are. I think it's
wild, guys. Can make this stuff up. I mean, trillions and trillions of dollars have been going, literally going into the stock market. And they still complaining about giving y'all another stimulus check, which is y'all money, a tax credit.
Secured to our satisfaction, and we can't lend to insolvent companies. You know, it's clear these are lending powers, and we are ultimately bound to implement the laws that Congress gives us. We do not make grants. We can't make grants. And the reason I raised that in my remarks is that I just want to be clear on that. We can do what we can do, and we will do it to the absolute limit of those powers. We'll keep at it. And I just want people to know that we will be at it with the legal authorities that we have until we get through this thing. We will keep using our authorities. But there are authorities that we don't have, and there may be a need for those authorities to be used as well as ours.
Heather Long.
Hi, Chair Powell. It's Heather Long from the Washington Post. I have two questions for you, both on timing. The first, do you plan to launch the corporate credit facility and the Main Street lending facilities in May or early May? Anything you can give us a sense on timing? And the second, in the statement you refer today, the FOMC refers today to a lot of medium-term risks from the pandemic. That sounds like you all think this is going to be a long recovery, a long road to recovery. Can you give any more guidance on how you all see this recovery?
Well, they say it's going to be a V-shaped recovery. Steve Mnuchin.
So in terms of those facilities, the corporate credit facilities are near being finalized and will be operating, I would say, soon, fairly soon. Main Street facility is, we're close to announcing, to issuing a new term sheet. As you know, we put out a term sheet for comment a while back, and we got a couple thousand comments. We've carefully studied them. We've tried to reflect those in what we're doing now. I think with Main Street, there'll be at least a couple of different kinds of lending going on there. This is a broad area of the economy with many different kinds of credit needs. So we're going to keep at that for some time, I think, adding in sectors and lending products. So I think we'll probably be continuing to work and expand Main Street for some time, but it won't be done quite as quickly. But the first part of it, I think, will be done fairly quickly. In terms of our statement, so what we said was that I'll just read the sentence. It says, ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term and poses considerable risks to the economic outlook over the medium term. So what we meant by that over the medium term. So obviously what we're talking about is not right now and the very near term. It's between now and the long term. So the next year or so. And I would point to a couple of risks to the outlook that what we were thinking of. First is just the virus. How long will it take to get it under control? Will there be additional outbreaks? Will there be drugs that can either treat it or a vaccine of some kind? So all of that is very much shrouded in uncertainty. The second issue, and this is a very substantial one, is just the possibility of damage to the productive capacity of the economy through a couple of channels. The first is just workers who, if one is unemployed for an extended period, that person can lose the skills that are needed, can lose touch with the labor force, and have difficulty restarting his or her career. So that's a feature of deep and long recessions, and that's something we've got to watch out for. Another is just businesses. You know, these thousands of great medium and small-sized businesses that we have all over the country, they're worth so much more to the economy than the sum of their net assets. They contain, you know, they're job creators. They're really important. And if we see an unnecessary insolvencies, a wave of those, that could be damaging to the performance of the economy over time. So the good news is that we have policies, as I mentioned in my remarks, we have policies that can address those things, but not perfectly. So that's another risk. The third thing I would point to is just the global dimension. This is a very global phenomenon, and we're seeing economic data from around the globe, which is very, very negative, and that too can weigh on U.S. economic performance over time. I would say just on the U.S. economy, there are things you can say. One can say the first is that in the near term we're going to see, you know, significant declines in economic activity, significant declines in employment, and increases in unemployment. We're going to see that as a consequence of the virus and the measures we're taking to protect ourselves from it. The next phases are more uncertain, highly uncertain, but we will go through a phase starting fairly soon where we begin to reopen the economy, and probably the economic activity will pick up as consumer spending picks up. Consumer spending, as I mentioned, is going down quite a lot. It'll begin to pick up as people start to return to their normal patterns of spending. But the chances are that it won't go right back to where we were, because people will, until they're confident that the virus is well and truly under control, then they will be somewhat probably reluctant to undertake certain kinds of activity. So it may take some time for us to get back. It probably will take some time for us to get back to, you know, to a more normal level of unemployment and ultimately to maximum employment.
Okay, James Politi.
Thanks, Chair Powell. You didn't firm up your guidance on, this is James Politi from the Financial Times. You didn't firm up your guidance on interest rates at this meeting. And given the risks that you just outlined, under what circumstances would you strengthen the Fed's commitment to keep rates at the lower bound? And is there any danger to delaying that pledge? And on the credit facilities, what kind of demand are you expecting for the programs that were set up under the CARES Act? And are you expecting them to rapidly reach capacity like the PPP plan did?
Okay, so on the first, as I mentioned, you know, we moved very quickly, very aggressively. We were the first to return to the effective lower bound where we are now. We got there essentially right away. And we think that's the right place to be. We think if you look at surveys, you look at market pricing, the market expects us to be there for a good while, and that's appropriate. So, you know, it's not as though the market is pricing in a near-term liftoff or anything like that. And let me just say, we're not be in any hurry to withdraw these measures or to lift off. We're going to wait until we're quite confident that the economy is well on the road to recovery. So we see our current stance and our current guidance, and I would say the same thing about asset purchases. We see them as appropriate. I've also mentioned now a couple times that we have done a lot of thinking about what monetary policy might look like over coming months, and that would, you know, depend on where we are in a range of potential economic scenarios. So we were thinking about that all the time, but right now, for now, we think our current stance is appropriate. So we made no change in it today. Second question was so the thing about our facilities is Treasury still has plenty of equity. So we've said that if demand for our facilities is greater than we've estimated, then we'll expand them. And we have the ability to do that. So it won't be the way the Paycheck Protection Program is, where there's a specific amount appropriated for it, and then there's no more money. That will be unlikely to happen here unless we exhaust Treasury's equity, and we're a long way from doing that. The second thing I would say is, and you've all seen this, is when we announce these facilities, and I mentioned this in my remarks, it's not just the actual lending we do, we build confidence in the market, and private market participants come in, and many companies that would have had to come to the Fed have now been able to finance themselves privately since we announced the initial term sheet on these facilities. So that's a good thing. Companies are out there financing, they're out there raising liquidity. We haven't made any corporate loans in those facilities. We've made the short-term money market loans, but we haven't made any of them. And yet there's a tremendous amount of financing going on, and that's a good thing.
So the money market loans right now are garbage. Know why they're garbage? Because interest rates are super low. If interest rates are super low, that means your money that's in the money market account is not making a lot of money. Very simple economics, guys. Don't let them bamboozle you. This whole issue with the money markets are just a sham right now.
Okay, Howard.
Again, you come out better just buying S&P 500.
Oh, hi, Chair
Even
Powell,
at all-time highs under this coronavirus, make no money in a money market account.
And the connection between the health response. You said earlier, I think, that you thought the second half of the year could see a pretty robust rebound. Is that now out of the question? And do you think a steady recovery is really possible until a vaccine's developed, given the patchwork of measures we see taken around the states? Is that going to really lead us to a steady path out, absent a vaccine?
You know, as you know, economic forecasts are always uncertain. Today, they're unusually uncertain, and that's really because so much of the performance of the economy depends on the path of the virus and the success of the measures we take to control it, our success in reopening the economy, and also the time it takes to develop new drugs. And our tools, the things that we do, don't affect any of those things. We're not experts on those things either, but what the experts tell us is that the outcomes are highly uncertain. So this is an unusually new kind of uncertainty added on top of our regular uncertainty. But I will say I think there are a few things you can say about the path ahead. First, this time now is going to be a time of sharp contraction in economic activity, high unemployment, personal consumption expenditures have declined sharply, business investment as well, unemployment moved up. We're going to see economic data for the second quarter that's worse than any data we've seen for the economy. And they're a direct consequence of the disease and the measures that we're taking to protect ourselves from it. So then we'll enter this new phase, and we're just beginning to maybe do that, where we will, formal measures that require social distancing will be rolled back gradually and at different paces in different parts of the country. And in time, during this period, the economy will begin to recover. People will come out of their homes, start to spend again. We'll see unemployment go down. We'll see economic activity pick up. And when will that be? It's very hard to say. But let's just say, for this purpose, that it's in the third quarter. So, as I mentioned earlier, that could be a fairly a large increase. Given the size of the fall, the increase could also be substantially large, although it's unlikely that it would bring us quickly all the way back to pre-crisis levels. Of course, this is the period as well that carries the risk of new outbreaks of the virus, something we really want to avoid. I think then, after that period, at some point you will have, the kind of formal social distancing measures will be gone, but you'll still be left with probably a level of caution on the part of people who will worry. And probably keep worrying for some time. You would think that behavior will change as people gain confidence. So that the sooner we get the virus under control, the sooner people can regain that confidence and regain their economic activity. I think trying to be really precise about when that might happen and what the numbers might look like is, I think it's very tough to do that.
Okay, Steve Matthews.
Steve Matthews with Bloomberg. Chairman Powell, you've noted a number of times over the last year that there's been a broadening out of job gains with marginalized workers, people who've been left out of the recovery over the 10-year period, finally making job gains, and particularly minorities, but also many other workers. Do you worry that this recession is going to fall hardest on those workers who struggled and just got job gains in the last year or two, and that it may take years from now before there are opportunities for them again?
Yes, that's exactly what I worry about. So unemployment has tended to go up much faster for minorities and for others who tend to be at the low end of the income spectrum, and it tends to come down faster as well, but it tends to go up faster and be much, much higher. And we were in a place only 2 months ago. We were well into beginning the second half of the 11th year is where we were. And every reason to think that it was ongoing. We were hearing from minority, low and moderate income and minority communities that this was the best labor market they'd seen in their lifetime. All the data supported that as well. And it is heartbreaking, frankly, to see that all threatened now. All the more need for our urgent response, and also that of Congress, which has been urgent and large, and to do what we can to avoid longer run damage to the economy, which is what I mentioned earlier. This is an exogenous event that, it happened to us. It wasn't because there was something wrong with the economy. And I think it is important that we do everything we can to avoid that longer run damage and try to get back to where we were, because I do very much have that concern. I think everyone is suffering here, but I think those who are least able to bear it are the ones who are losing their jobs and losing their incomes and have little cushion to protect them in times like that. So yes, that's a very big concern.
Victoria. Hi, I'm Victoria Guido with Politico. The Paycheck Protection Program has experienced some logistical problems because of the speed at which all of this is happening. But for the Main Street lending facility, which will also work through banks, what lessons are you taking away from that? And then more broadly, you mentioned earlier this year that the federal debt was on an unsustainable path. And I was just wondering, for Republicans that are starting to get worried about how much fiscal spending they're having to do in this crisis, whether that should be a concern for them.
So a couple things. This is different from the PPP, the Paycheck Protection Program, in two ways. One is these are not grants; these are loans. So I don't know that the demand will be quite as strong as it has been for the PPP. I don't know that, but and the second thing is we won't run out of money. It's not a limited pot, so there won't be this incentive to try to get there first and that sort of thing. So I'm hopeful we will very much try to learn as much as possible from that facility and from all the other ones too. We have a lot to learn here, so we'll certainly be trying to do that. In terms of fiscal concerns, so for many years I've been, before the Fed, I have long time been an advocate for the need for the United States to return to a sustainable path from a fiscal perspective at the federal level. We have not been on such a path for some time, which just means that the debt is growing faster than the economy. This is not the time to act on those concerns. This is the time to use the great fiscal power of the United States to do what we can to support the economy and try to get through this with as little damage to the longer run productive capacity of the economy as possible. The time will come again, and reasonably soon, I think, where we can think about a long-term way to get our fiscal house in order, and we absolutely need to do that. But this is not the time to be, in my personal view, this is not the time to let that concern, which is a very serious concern, but to let that get in the way of us winning this battle, really.
Okay, Edward Lawrence.
Oh, yeah, thank you, Mr. Chairman. Edward Lawrence from Fox Business Network. Now, given the amount of stimulus on the fiscal side and monetary policy side, how much weight do you give to finding a vaccine, from clearing that uncertainty you talked about around treatment and whatnot, for the Federal Reserve pulling back on some of the Fed's actions and raising the rates from the zero lower bound? Also, when does that Main Street lending facility get deployed? Because you talked about soon, some businesses are in need now. Thank you.
So we don't, we're not in a position to make, a reliable assessment of when a vaccine or a therapeutic drug would be ready. And so we're not going to set our policies based on our estimate of that. We're going to just provide the support that we can with the tools that we have, and we're going to keep doing that until the recovery is well underway. In terms of Main Street, so you know the story. We put out a term sheet. We got a lot of comments. We took those very much to heart. We spent a great deal of time here. It's a challenging space because it's many different kinds of borrowers. They have different needs, different sizes of companies, and so we're as I mentioned, we're very close to announcing a new term sheet, which will then become operative fairly quickly. My guess is, though, that we'll keep looking to add products and add different kinds of borrowers to that as we go. And we're well aware of the importance of doing it as quickly as possible. We're very much in touch with the urgency of that need.
Okay, Don Lee.
Chair Powell, it's Don Lee from the LA Times. Just wanted to follow up on the question on the labor market. I know you said that it's highly uncertain, but there are analysts who think that we'll have very high unemployment until even the end of next year, as high as 9%. And at this point, can you just talk a little bit more about what you see as the path of employment in the coming months and into next year?
Sure. So unemployment is going to go up to a high number in the second quarter. Uncertain what the number will be. And that's because so much economic activity has been shuttered, really, as we take social distancing measures. So sometime fairly soon here, and probably gradually and at different paces at different parts of the country, we'll see the social distancing measures rolled back. People will begin to spend more money. It's really consumer spending has fallen precipitously. And once that starts to happen, people will get hired back and unemployment will go back down. I don't think it'll get anywhere near the historically low levels that we had in as recently as February, 3.5%. I think it will take some time for that to happen, for us to get back to anything that resembles maximum employment. But I mean, the main thing we want to get back on that road. We want to get that recovery going and get people back to work as fast as we can. Not faster than we can, but as fast as we can. And the main thing is to get into that stage where the economy's healing, where we have the disease under control, where we don't, take too much risk of second and third waves and that sort of thing, and get people back to work. And it's again the path of it is highly uncertain, but we will be there with our tools, supporting the economy and supporting that recovery.
Scott Horsley.
Thanks, Mr. Chairman. After the financial crisis, banks were instructed to up their capital so they could weather an economic shock. What kind of steps do you think we need to take for the economy writ large to make it more resilient to this kind of shock?
Can you just say that part? You're a little bit low volume.
Yes. What kind of steps could we take to help the economy as a whole be more resilient to this kind of exogenous shock?
This it's an extraordinary shock, unlike anything certainly that's happened in my lifetime. And a couple things come to mind. I think the time will come for a careful assessment of the answers to those questions. It's early to be asking them. We're still putting out the fire. We're still trying to win, and I think we'll be at that for a while. But I'd point to a couple of directions. We worked hard to strengthen the banks, much higher levels of capital, liquidity, a far greater sense of what the risks are they're running and how to manage them. The breakdowns that we've seen in market function have really been in the capital markets, and I wouldn't rush in with prudential regulation into the capital markets, but I think, and we did plenty of things, tri-party. We did a lot of reform in the capital markets, money market reform, tri-party repo reform, central clearing, all these important things. But there will no doubt be, with this, the size and force of this shock will no doubt reveal weaknesses in the financial architecture, and we'll have to go to work on those. I also think it tells you the importance of getting your fiscal house in order. The U.S. really hadn't gotten back to where we needed to get on fiscal policy, and so we have an already high level of debt to GDP and rising quickly when this shock arrived. Now we have the fiscal capacity to deal with it, I believe. But we will need to, ideally you would go into an unexpected shock like this with a much stronger fiscal posture.
Mike McKee.
Mr. Chairman, given the demand shock and the drop in oil prices, do you anticipate that we might see any kind of deflation, even for a very short period, that would require a Fed response? If we get a negative print on CPI or PCE, how should people think about that? And second question, there is a disconnect, it appears, between the markets and the economic outlook right now. And I know you've said that this isn't the time to worry about moral hazard, but do you worry with the size of stimulus that you and the Congress are putting into the economy, there could be financial stability problems as this goes along?
In terms of inflation, we think that inflation is very closely and strongly related to inflation expectations. And during the global financial crisis, there was a concern that we might see deflation, but it didn't happen. Inflation tended to move down a little bit, as it will when demand is weak. And but inflation expectations did not move strongly down here in the United States. They have in other places in the world, though, over the past 25 years. There's been downward pressure on inflation really for several decades now. So I would say as long as inflation expectations remain anchored, then we shouldn't see deflation. And the Federal Reserve is strongly committed to maintaining 2% inflation over time. So we'll be there to work on that. I think you asked really about headline inflation. If low energy prices, very low energy prices, were to drop headline inflation negative, I would hope that people would see through that, and we'll be monitoring it very carefully. Would see through it though, and look to core, which is a better predictor of future inflation. So needless to say, we'll be keeping very close track of that. In terms of the markets, our concern is that they be working. We're not focused on the level of asset prices in particular. It's just markets are trying to price in it's something that is so uncertain as to be unknowable, which is the path of this virus globally and its effect on the economy. And that's very, very hard to do. That's why you see volatility the way it's been, market reacting to things with a lot of volatility. But what we're trying to assure really is that the market is working. The market is assessing risks. Lenders are lending, borrowers are borrowing, asset prices are moving in response to events. That is really important for everybody, including the most vulnerable among us. Because if markets stop working and credit stops flowing, then that's when you see very sharp negative, even more negative economic outcomes. So I think our measures have supported market function pretty well. We're going to stay very careful carefully monitoring that. But I think it's been good to see markets working again. Particularly the flow of credit in the economy has been a positive thing as businesses have been able to build up their liquidity buffers and households have been able to be home. People have been home, concerned about their jobs, but they're not concerned about the financial system collapsing as they were in 2008 and 9.
Okay, Chris from the AP.
Hi, Chair Powell. Chris Rudy over at AP. Thank you. I guess I had two questions. I wanted to start on the unemployment picture and nail down a little bit how you see things going from here. You did talk about potential loss of skills over time. So are you worried about structural changes in job markets that would keep unemployment high and therefore potentially beyond the ability of the Fed to do anything about, which is something that was debated, as you know, after the last recession. And then eventually, of course, the unemployment rate did go lower than people thought. Second question is just on the money from Treasury, the $454 billion. It sounds like you want to keep that in reserve for programs that have high demand, such as the Main Street program. Are you willing to use that to backstop, say, a program that is having more losses? What's your tolerance for loss among that $454 billion? Thank you.
So in terms of the labor market, the risk of damage to people's skills and their careers and their lives is a function of time to some extent. So the longer one is unemployed, the harder it gets, I think, and we've probably all seen this in our lives, harder it is to get back into the workforce and get back to where you were, if you ever do get back to where you were. So, and longer and deeper downturns have left more of a mark generally in that dimension with the labor force. And so that's why, as I mentioned, that's why the urgency in doing what we can to prevent that longer run damage. It doesn't have to be that way. We won't be able to limit all of it, but we do have the tools to do what we can to keep people in touch with the labor force and working, and also out of insolvency too. It doesn't seem fair that people should lose everything they have, including their homes, over this. So nonetheless, there will be some of that, but we do have some tools to ameliorate that. In terms of the money, the $454 billion, it's a couple things. First, the Treasury Secretary really has authority over that, right? And it stands in front of our losses. But I do think we're clearly moving into areas where there is more risk than there has been in the past, and that's okay. I think that's what we're supposed to do. This is a very unusual time. And so, but in terms of the way to think about that money, I think that's really a question for the Treasury Department. We set up the facilities and we work very, very closely and successfully and collaboratively with the Treasury on this. But that particular aspect of it falls more to the Secretary.
Okay, we'll go to Nancy Marshall-Genzer for the last question.
Nancy Marshall-Genzer with Marketplace. Chair Powell, I'm wondering what you would say to savers who are hurt by very low interest rates and maybe going into investments, maybe in the stock market, that aren't so great for them. And also, I'm wondering if you can give us any more of a clue as to how long you think we're going to have interest rates near zero.
So we think that low interest rates affect the economy through a number of channels in a positive way. Lower interest rates support economic activity through channels that we through channels that we understand reasonably well. They make it cheaper to borrow. They make they drive it, your costs of borrowing down. They do raise asset prices, including the value of your home. If your saver owns a home or has a 401k, your saver will benefit from that. But for people who are really just relying on their bank savings account earnings, this is that's you're not going to benefit from low interest rates. But we have to look out for the overall economy. Low interest rates support employment, they support economic activity, and those are our mandates. And I think for the overall good of the economy, low interest rates are a good thing. It's not to say they're good for every single person, but that shouldn't stop us from doing what we think is good for the whole. In terms of how low, I really don't want to speculate. We will turn to questions like that soon enough, but in terms of how long we'll stay and under what conditions we'll stay at the effective lower bound, those are just exactly the things we're thinking about right now. We like the place we are. We've said that we'll keep our rates where they are until we're confident that the economy has weathered the effects of the outbreak and is on track to achieve our goals. So that's where we are. We're not changing that guidance today, but it'll be. That means we're going to be very patient. That means we're not going to be in any hurry to move rates up.
Thank you very much.
Thanks.
Fed Chair Jay Powell speaking to reporters via video conference, saying the Fed is there to provide necessary support to support the economy during this unprecedented crisis. Welcome everyone to Closing Bell. I'm Sarah Eisen here with Wilfred Frost. Stocks are higher. We're just off session highs, Wilfred, as the Fed chairman paints a pretty grave picture of what the economy is looking at, characterizes the hit as severe, certainly on unemployment, on economic growth, on household spending, both in the short and medium term, which is getting a lot of attention. The medium term outlook has the risk. That was characterized in the statement. And saying the Federal Reserve has already put in place extraordinary action to keep markets working, borrowers borrowing, credit flowing, and is prepared to do more and has more tools if needed to be. Trying to send a message of confidence that the Fed is here, and also calling on fiscal authorities to keep working as well to support this economy.
Yeah, saying the Fed very much do what it takes, certainly not an optimistic outlook in any way, shape or form for the economy. We did see a fractional tick up in the long end of the yield curve in terms of yields. 10-year note got up to 0.63, having been at 0.59 earlier in the session. It's somewhere in between that, 0.61 at the moment. The dollar did weaken a fraction. It was just lower. It's now down by about 0.3%, as you can see there on the yield curve. A slight steepening of the yield curve today. Either way, we are near the session high, still up 600 points plus on the Dow. The high of the session was 663. 3% gains for the S&P 500, almost 4% for the NASDAQ, Sarah, and the Russell up 5.4%. Certainly continuing the theme of.
All right. All right, as they say, enough of that, right? Enough of that. Kind of already got the gist of what's basically going on with that. And exactly where they're positioning themselves again, going into the Q2 kind of session, earnings cycle session. Obviously, we're dropping the Q1 earnings session numbers now, but they're positioning themselves for what's to come in the Q2 cycle going into Q3, which will be very detrimental for the overall economy, because again, at that point, that's when it will truly
reflect. Right, it will truly reflect where we are in terms of some of these companies who are giving their earnings reports and things of that nature. Right, because right now you're just getting somewhat what you consider to be like the periphery of what they will look like next earnings cycle. Oh, it's gonna look, it's gonna be great. It's gonna be ratchet. And so basically, what you're getting now is a lot of companies who are coming in, kind of coming into the front door aspect of it with bad numbers, but they're still getting a favorable nod by Wall Street, right? And they're running the stocks up on a lot of, I think I can kind of, juice right now, right? Again, we spoke about, well, we haven't spoke about on here, but Boeing, right? Boeing being one of those type of scenarios where they're benefiting, again, off all this, secondary optimism, if I like to call it, but again, they printed some of the worst numbers they ever printed, in their historical aspect as a, publicly traded company, under the criteria that they're dealing with the coronavirus. But beyond that, a lot of the stuff that they went through was self-inflicted, right? Boeing was just, recklessly just taking shareholders' money, giving, executive bonuses out the roof. And again, a lot of just, very, very just reckless, fiduciary responsibility to its brand and its shareholders, to be honest. But in the long run, it was all for corporate interest and corporate profit value, right? And now again, they're stuck now here holding the bag, trying to get a bailout, or utilize some kind of aspect of free money to continuously their bad habits, right? So again, you're looking at the market here. I mean, look at Boeing. Again, Boeing today, again, missed on earnings. I mean, bad missed on earnings too. Stock did what? Gaps up, right? Gaps up, catches a bid, at 8 o'clock hour. I was when the numbers came out, right? Went up, I was on bad earnings. Went up and squeezed higher. So this was all in relation to what? Them propping the SP 500 up early, right? So this is the whole hustle, right? Get the money in early on stocks that have a big influence over the overall market. Pump the SP 500. This ETF obviously has a lot of weighted value when it comes to stocks like Boeing, Apple, and Ford, and all the other companies like that. And because of that, it gave these algos, because that's what was buying a lot of these companies. It's funny because people keep forgetting that the algos now have taken over literally the market in a sense. In most cases, right? It's Machine City 2.0 in the financial free markets, backed by again the Federal Reserve, who's dumping all these billions of dollars into the market every single day and way through the banking system as the shield, so they can get away with doing what they're doing in terms of this heist, right? This taxpayer money heist, right? Because that's basically what it is, right? They're taking taxpayers' money through the value that the Congress is lobbying, stimulus values and monetary policies to go towards helping soften the blow of this coronavirus. And the majority of that money, we talk about well over 80% is going into the financial markets, not the taxpayer's hand. And these people look at you with a straight face and act as if you're supposed to be fine, while again, people, on this side of the house who's sitting there advocating this foolishness and acting like this is a game to them, like a video game, because they get to see the stock market just go higher, as if that turns them on. Again, there's not nothing to do with people who got long-term investments. Obviously, I do. But ultimately, it does not add up or warrant to that of what you're getting in terms of how they're utilizing all this wasted money to prop up a stock market that can't feed the average American that has no clue about the stock market or investing. This is propping up wealthy people. This is keeping wealthy people happy. This is making wealthy people who are sheltered in can sit back and smile and say, yep, we good to go. We still got the Fed in our back pocket. We still got Congress in our back pocket. Right? We still got the Democrats and the Republicans fighting each other over who, they're gonna potentially, lobby money to give away to more, people who don't necessarily need it the most. And American people, or the mainstream aspect of America, is sitting here trying to figure out how they're gonna pay their bills after the 3-month moratorium when it's over, when your bills all come due at one time. Right? All come due at one time. A month worth of rent, a month and a half worth of lights and electrics. And you're gonna pay all that in one drop after being laid off or furloughed? Don't want to do away with student loans, but they want to do away with corporate debt. They rather buy up junk bonds on the HYG, right, as opposed to utilizing the ability to take off at least $1.6 trillion in debt from student loans. As I showed y'all on the national debt, pretty much world clock, where student loan debt is at up near $1.6 trillion. If they wipe that out alone, that frees up consumer spending in ways you could ever even imagine. You talk about the average holder of student loan debt is around about $37,000. The average American, on an average aspect, when you don't think about the greater fold of the country. So that means if you do away with that $37,000 per each individual consumer that has student loan debt, what does that do to their ability to go out and spend money on other things at this point? To free them up in more ways than we can even imagine, removing the stress, removing a lot of that headache and headwinds and roadblock that comes along with having student loans over their head. They rather not do away with that, but they rather, again, buy up corporate debt, corporations debt, frivolous spending on yachts and this and third and traveling and dumb stuff and corporate buybacks and executive bonuses and mismanagement of money and bad engineering from Boeing and unlawful practices at Kraft Foods, Heinz, and they rather buy up those levels of debt and leave you stuck holding the bag again, tell you that you need to take out a loan and not give you a grant, but give you a loan knowing that you're already underwater because, again, you've been out of work, and then there's no even guarantee you're going to be going back to work, and they act like this is fine. This is fine, right? That little meme with the little dog in the burning house, this is fine. So it's all, again, just a lot of just, again, there's no way you can explain it with a straight face because you know what you're dealing with, right? You know exactly what you're dealing with, right? And so for us, again, it's not that we get angry and try to fight the Fed. It's that we're supposed to be smart in these moments. Listen very tactfully, right? Again, it's like war in a lot of ways because, again, you're fighting for your what? Your way of life, your cost, your comfort of living right now. And the people that says that they have your back, show me how they have your back. Show me how have you really benefited from this whole entire month of sitting down? Anybody? Did your bills go away? Student loan, light bill, electric bill, phone bill, mortgage, rents, did they go away? Or did they just go sit on the shelf and they sitting there festering and collecting more, aggregate value of a value, a principal amount that you have to pay back, even though they try to do away with the interest? Interest really? It has nothing to do with the overall, still thousands of dollars that you're still paying in mortgages and rent. And you're supposed to pay all that at, 2 months worth of rent back, and some people 3 months worth of rent back in one drop after the moratorium is over. So again, it makes you feel very helpless. You can't do nothing about it, but you know that they're, again, just insidiously and very frivolously and very criminal value, just blowing a lot of taxpayers' money, because that's who's fronting all this. Couldn't make this stuff up. This is not a hyperbole conversation point that I'm putting out. This is 100% by the tape and the fact. This is being propped up by taxpayers' money. The airline industry is being propped up by taxpayers' money. Cruise lines and restaurants and things of that nature are being propped up by taxpayers' money. And the taxpayers got what? A chance to sit home and just what? As if that's some kind of, I don't know. I mean, is that a trade-off for you not being able to provide income for yourself and your family? Right? I mean, again, I'm just trying to be very neutral and, and conscious in my words and in the aspect of what I've been able to learn through, following the economic, aspect of this country. My understanding of financial, literacy, and this is how it works, for the average everyday American in terms of how it all folds into the greater scheme of things. I don't see how they can convince, anybody on the Main Street side of the house that has no clue about investment values, how they're getting the benefit at this point because this coronavirus, shut everything down. And again, it took forever just to even get a base $1,200 check. And the majority of the checks still ain't even came all the way out today. I mean, you got another tranche of them supposed to be coming out today, but people still waiting to even get their check. So that means they had to wait 2 or 3 weeks after the first people got theirs, and they still ain't got their check. As if your refrigerator, can wait, right? As if your refrigerator can wait and stuff like that can just wait 2 or 3 weeks. Like, who has 2 or 3 weeks worth of grocery packed inside their refrigerator? They was already grinding hard, working, check to check and this, that, and the third. Seriously? Seriously. I mean, it's a complete slap in the face of people who have, again, undoubtedly over the years now needing to realize what they're up against when you think about the institutions that are out there that people praise and laud over all the time. And they literally have no clue how maniacal these people really are. Again, there's a talking point where I hear people saying, whether you trust the government or you don't. And I'm like, how can you? Because if you understand how government works, it's not about if the institution has some kind of credibility values that makes your life a little bit more easier to coexist under. That ain't the case. It's about the financial aspect of what it does in terms of making your life sustainable and to the point where you can expand your life, expand your livelihood, I should say. Opportunities that should be afforded to you, not just, okay, I can, my child car seat regulated. Like seriously, seriously, seriously. People get it twisted. You need to follow the money, right? You follow the money. You follow basically what your so-called quote unquote government is or is not. In essence, you're paying into a system that treats you like a third-rate citizen, obviously in an aspect where they can take your money, and then they go out there and do other things with it that obviously enriches those who already have what? Riches. Right? Then they say, well, then they throw the blowback is, well, you're in the capitalist society. Well, you got the ability and the right to do like everybody else and open up a business and this, that, and that, blah, 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 blah. Like, seriously, stop. Right? Stop. Because, I mean, we know it's much more, intricate than just that. Right? There's a lot of, again, benign neglect and policy redlining and everything else under the sun. Right? We just sat there and saw it happen in real time with the loans. Bank of America, Wells Fargo, JP Morgan, all the other institutions were scared to let that money go. That wasn't even their money. Congress signed the stimulus bill, gave the money to the banks, and the banks sat on it saying, nope, we need more, track record to follow your spending habits. We need to make sure you put up more collateral, this, that, and the third. And it's not even their money. They're sitting there lobbying, trying to convince the people who need it most that they can't utilize that money until they meet a higher standard or criteria now in order to get those loans. Like, this is the foolishness that people, have no clue about, and they need to start learning and understanding how this monetary system works. Hence, that's why, we played that documentary, understanding how the monetary system works and capitalism, because these are the people who are lobbying over your life every day, right? Making decisions that affect your life. The money, follow the money. I'm not following no child's car seat regulation. I'm not following no, again, no disrespect to that kind of aspect of governance. I'm not worrying about what OSHA, EPA, EPA regulators are talking about like at this moment. What's most important is, can you feed your family, take care of your family, and protect your future and what little nest egg you may have or may not have left. Right? Because again, people are pissing away your retirement, pissing away your opportunities to survive and thrive only for the interest of trying to see how they can experiment with utilizing, again, taxpayers' money to prop up certain entities to see if it works. Right? Again, you literally heard Jerome Powell say in so many ways, this is a grand experiment. Well, we got unlimited money. We have unlimited money. It's not the money ain't the problem. If you got unlimited money, and there's all these debts out there that could be wiped away that frees up the GDP. Also, the average consumer debt in a way they can really come back into the economy and consume to get us back to a place where we're having that kind of turnover. Then that would be the surefire thing to do. Go take care of some of these, these more so, I like to call them for what they really are, the parasitic debt that stifles a person's livelihood, which is obviously dealing with stuff like student loans. And some of these schools already turned out to be garbage and got busted and exposed, and they still making that hard for people that can't even do, borrower defense student loan removal. Or, a school, went out of business while you were still in, and they still making that stuff hard. These people are trying to go down. It's funny again, but you know what? Y'all know what it is. Y'all know what it is. But for us, again, we go on our little rants. We say what we got to say. We understand it. But you still have to realize where you stand in the grand scheme of the economic backdrop of this. How to still not be in a situation where you feel like you're backed into a corner financially. That's basically what they're doing right now with keeping people sheltered in and not giving you the kind of stimulus that you really need. You're not taking care of my bills. They just putting them on the back burner. See what I'm saying? They're not doing away with. They're not bailing you out. Show me where they're bailing you out. They're bailing corporations out right now. Bailing them out, literally, where their loans will turn into a grant if they just follow one little simple rule. Keep their workers on payroll and try to, manage your business through all this economic uncertainty. That instantly turns your loan into a grant. Get out of here. And here it is, you can barely even go borrow money, even as a citizen now, because all the traffic jams and over server capacity, where people can't even get through even the unemployment benefits line, or even stand in line to get to a desk reception to even get their benefits rolling on that side of the house. I mean, it's just one complete hustle and one complete, again, it's just 100%. It's fascism. People don't want to call it what it really is. Really fascism, right? We spoke about it being socialist to us, respect the social part of a socialist mandate to in the beginning, to an extent, but then it instantly turned straight into fascism, where the government is bailing out corporate interests and not necessarily doing that for the actual true taxpayer in its entirety. It's called fascism. And the Federal Reserve is the one leaky, ratchet, useless institution that has been proven to be co-opted from years ago when they first started, which they didn't want to start it, but they got pressured into starting it. That has proven time and time again that it has a mandate, again, for a certain type of people and a certain type of people only. And it does the will of those people. And it's supposed to be for the backstop of the overall greater good of the country, meaning the average person. These people are not speaking nowhere near in the terminology of the average everyday American, where they can interpret it and say, okay, well, he said something that mattered to me, where it protects me and makes me feel good. We just sat there and listened to that. Again, you guys are obviously a lot smarter than a lot of people, again, because this is our lane now. We follow this stuff, we study, we're getting better. But the average person out there that would have listened to that press release that Jerome Powell just put up, how many of those people probably think would have probably would have been in a position where they could have deciphered exactly what they were talking about? That's the conversation went completely over their heads. Completely over their heads.
None.
And it was in the worst way, that, again, it's more of a, man, I tell you.
This is what we say, man. Financial literacy is vital.
Hold up. Let me cut this thing down. Sorry. One second, guys. Excuse me. All right, so I'm trying to figure out why this thing isn't playing. If I had it down, I don't know. Can you guys hear me? Mic check, mic check. Can you guys hear me?
Yeah.
Let me see, guys. This thing was playing in the background. Can you guys hear me? Mic check, mic check. Can you guys hear me? Over, yeah, Chris, can you hear me?
Yeah, I can hear you.
Hold up.
Yeah.
Let me see. Over, Chris, can you guys hear me?
Yeah, I can hear you.
All right, something happens. I'll just to my mic. Let me make sure. Okay. Because I can't hear.
You can't hear me,
Chris, right now. I always tell be switching over again. It gets lost in the sauce. Hold up 1 second. Forgive me, guys. All right, there we go. Over, Chris, say something.
Can you hear me?
Okay, I can hear you now. Sorry. So you guys could hear me. I just couldn't hear you. Okay, my bad. Forgive me.
Yeah, you good. Yeah.
So again, just putting that into context again, and I want everybody to to be comfortable. I want everybody to understand again. Again, I don't claim to know it all. I have no no accredited licenses or education in essence in dealing with these kind of subject matters to that level of degree. I just have life experiences, right? Like most people who've been down, who been down the road or owning property, whatever, sitting down through those processes, living life and working and owning your own business and going through little aspects of that and seeing how all this stuff works, but learning how to put two and two together. Again, this stuff ain't hard to figure out basically what you're dealing with. Again, you have people who have a more of a, I shouldn't even use that word. All right, I want to say the word sinister, but in essence, it really seems to be somewhat sinister. And this is how they're utilizing, again, the greater good of what the country is as a excuse to say, well, at least you got this, right? At least you have the ability to go to McDonald's again at 2 a.m. in the morning, and the police to roam around your neighborhood to make you feel safe, and the fire department. As if that in itself is enough to say, for what you put into the country is a worthy enough payout or a somewhat like a even trade, right? When you're hearing, year over year when people say we don't got no money. The economy is broke. We don't have no money. We can't pay for reparation. We don't have no money. We can't provide for books and schools and stuff like for schools and stuff like that. We don't have no money. We can't fix the bridges and the roads and in the community. We don't have any money, right? We don't have any money. We can't strengthen up and hold our police and institutions like that up to a high regard and give them the things they need to be better in what they do. So we don't have any unfortunate death. We don't have any money, right? We don't have any money to offer people better jobs, better skill training jobs that'll put them back into the workforce to really get the economy boosting to the point where you can really bring back manufacturing stuff like that and stop outsourcing. We don't have any money. Y'all literally heard people use that "we don't have no money" excuse for the entire last 13 years, including the last two president scenarios and now 3 years of Trump. And here it is all of a sudden in 1 month worth of sitting down, 1 month worth of sitting down due to coronavirus, all of a sudden in comes all this money from out of nowhere. In comes the talking points where the Fed came out and literally told you out of his mouth, not mine, that the money produced, having money is not the problem. He literally said money ain't the problem. We got unlimited printing power. Unlimited printing power. But ultimately, that is the problem. That is the problem. You have nothing that's backed by it. No resources in the ground here. Nothing you can really, balance out that kind of debt to equity value of paper printing and inflation, where you dumping all this currency into the markets now, right? And causing the power of it to be really worth a whole lot of nothing. But still, again, you got a gallon of milk just up near $3-4 a gallon. Again, good thing the gas prices are low right now. But again, it's like a slap in the face. It's a slap in the face. And so again, you have to be you got to find a way to be sanguine best you can, right? Optimistic and comfortable, and knowing that you're not backed into a corner when it comes to financial aspects of finding ways to procure income. And that's why the investment vehicles, even in the same thing that's being propped up and pumped up and utilized and taken hostage, I was in the stock market. Guess what? If they're going to print it and dump it and throw it into it, then you go get yours out of it. Then you go get your portion out of it and feel no shame about it. Because the average person who has no clue about this and just trying to figure out how they're going to feed themselves and do this, that, and the third, right? They're stuck. They're stuck. At least you got a tool, an apparatus that's being obviously highly manipulated, right? Because it is, right? Y'all know we keep it 100 over. We're not going to sit here and sugarcoat this to get people excited about wanting to learn this. You need to understand what you're dealing with. That's why we have these kind of conversations. So it eliminates all this kind of, delusions of grandeur, all this, get rich quick, it eliminates all that stuff out the gate. You need to come in this thing, learn how to be methodical, do your research, do your due diligence, be disciplined, figure out how to get these bags when they present themselves. Because these people have I'm serious, no remorse in dumping all this capital into the financial markets to prop them up, again, while Main Street goes hungry. That's just the facts. That's just the facts. Right? So at least you have an outlet where you can find a way to procure you some income or a little money here and there. I don't care if it's $25 or $5 that's more than what you had when you woke up today. While a lot of people who are obviously negative $25, $30, or $100 plus. Right? Because again, the market has no chill, right? It has no chill, right? On whether or not people are dying, crying, flying, whatever the case. SP 500, look where it's at. As if all that what Powell said was obviously, saturated news in a way where, let's run it even higher. As if we just already come from, from down here around $218, and now we all the way back up here into this major gun line. We broke back above we're barely above the 200-day moving average right now. Which, I'll tell you about that, is that gun line. If it gets back above the 200-day moving average, they're really going to try to either pump it or they're going to dump it. Look at this long green candle in the month of April. The entire month of April, all this death, all this coronavirus, this and this, that, economic headwinds are getting worse. This is deteriorating. This is deteriorating. This is going down in flames. This is ballooning. And look what the market did. It utilized taxpayers' money and did this. It went from here to here. And the first thing a person say, well, guess what, man? I mean, but you want the economy to crash, and what about people on 401ks and pensions? How many average Americans out there got a 401k or a pension right now? Go. Seriously. This is not Main Street. This is Wall Street. Main Street barely got 2 nickels to rub together. And you talking about a savings plan or a 401k. Seriously? So again, people vote against their own interests. I keep saying that for a reason, because people don't understand how the monetary system works. The Federal Reserve just sat there and told y'all they got money to what? Prop up assets. His whole talking point was about what? Asset. Mitigating the risk in assets. Keeping the markets from being volatile so it can go what? Higher on what? Nothing. Nothing burger headline, newsreels, and fake, drugs that they probably every single day saying, oh, well, we just had a phase study and the market goes up 300 points all that. As if the real world saying, man, we ain't got nothing. Right? So this is the game, right? So real quick, we got 10 minutes for the bell ring. I know we can get a chance to even getting around to our competition today, because I want to do our competition. We got some good stocks that are really coming down in earnings tonight and tomorrow, and Tesla, Microsoft, McDonald's. If you guys didn't already did it, we'll just have to push it back to tomorrow. But I really want to come on and really set the competition, in place so we can get a chance to do that this evening and tomorrow. But again, breaking news, FOMC meeting today, right? But again, what I will do though, I will leave y'all with this clip here. I will leave y'all with this clip here, right? Because again, understanding how the game works, understanding, how all this stuff is set in place in a way where, again, they're making a mockery, right? A mockery out of those who are not in the know, that needs to understand how this stuff really works, right? They're stealing from
the actual taxpayer and propping markets up. And hiding their hand and saying we don't have any no money for this. We don't have money for roads. We don't have money for schools. We don't have money for books and this and that and infrastructure and training people. We don't have money for that. But again, they just showed you how they printed $6 trillion in about 2 months and a half. 6 trillion with a T, right? With a T. Right? So again, just don't be fooled, guys. Again, you guys get it, obviously. That's why we're hanging out. I'm gonna leave y'all this beautiful beam footage right here. I'm gonna leave y'all with this beautiful beam footage right here. They got the entire, you can watch the entire, aspect of this. Just go Google it. It's about 14, 20 minutes, somewhere around there. But this is the 4-minute excerpt of Ron Paul going in on Ben Bernanke, right? This was the guy that was obviously under who? Obama, right? Right? But they are part of the same clique, these parasites, right? It went from him to Janet Yellen, from Janet Yellen to Jerome Powell, the federal chairheads. Who look at this look on his face. This is a person who says, whatever you say, I can care less, because again, people who really need me to be in this position, getting the benefit from me being able to steal from the taxpayer and keep them excitedly, secure and safe, and we'll allow other people to figure this thing out on their own, while we just sit back and act like we God, we in control of everything, we got all the power. What you gonna do about it? Let's roll that beautiful beam footage. Let me just stop talking. Can y'all guys still hear me? I just switched over to my microphone. I want to make sure you guys can hear me. Can y'all hear me?
Yeah.
All right, awesome. So let me roll this real quick, and then we'll get ready to get on off here. All right, I want y'all to, again, I'm always trying to provide something that's a little educational, right? I'm always trying to find something to change the status quo, how we've been looking at life and thinking about this monetary system and this corporation called America, and how this really works, how it really works. Again, I don't see it no more than what it is. It's a corporation. This is a business experiment. This country is a business experiment. And if you don't know how to navigate it, again, y'all know the deal. It's gonna pick you up, chew you up and spit you out. So every day we learn something new, it's a better way we get more leverage and advantageous moment to figure out ways to get what we need out of it in the same way, without having to do anything exorbitant, rough, hard, illegal, whatever, to live a more comfortable life. And it may not be your year this year, or may not have been your year last year, it may not be your year next year, but I guarantee 3 or 4, 5, 6 years from now, you're gonna blow. You're gonna blow. You're gonna blow. Be patient. Be patient. It took these people years to get inside the government and take it over. In essence, where they can funnel and steal money and do the things they've been doing and hooking and booking, and to be in a position now where they got more power than actually even the president in a lot of ways. In a lot of ways. But anyway, let's roll that beautiful bean footage. Let's get it. Right? Let's get it.
Mackey, if you don't mind, would you tell me whether or not you do your own shopping at the grocery store? Yes, I do. Okay, so you're aware of the prices. But, you know, this argument that the prices are going up about 2%, nobody believes it. You know, and the old CPI says prices are going up at 9%, so they believe this. And people on fixed incomes, they're really hurting. The middle class is really hurting because their inflation rate is very much higher than the government tries to tell them. And that's why they lose trust in government. You took over the Fed in 2006. I have a silver ounce here. And this ounce of silver back in 2006 would buy over 4 gallons of gasoline. Today it'll buy almost 11 gallons of gasoline. That's preservation of value, and that's what the market has always said should be money. Money comes into effect in a natural way, not in an edict, not by fiat, by governments declaring it is money. You know, as much as I would like to do something with the Fed, I say the Fed's going to self-destruct eventually anyway when the money's gone. But why wouldn't we legalize competing currencies? Why couldn't people save, put this in a mattress and get 4 or 5 times much of the value in a few years? So the record of what you've done in the last 6 years is destroy the value of real money.
First of all, good to see you again, Congressman Bob. Just one word on the inflation. Of course, those numbers are constructed by the Bureau of Labor Statistics, not by the Fed. They're independently constructed, and I think they're done in a very serious and thoughtful way. On alternative currencies, nobody prevents you from holding silver or gold if you want to. It's perfectly legal to do that. And you're also it's also perfectly fine to hold other currencies.
I'm sorry, can you guys see this? Are y'all being able to see it on YouTube? Are y'all able to see it on YouTube? I'm sorry. I noticed that the stream went black, so I don't know, man. YouTube up to this, normal, foolishness. Y'all can see it. Okay, great. I just want to make sure y'all can still see it in real time. Okay, sorry.
Euros or yen or whatever else. So in that respect, you can do that, and I'd be happy to talk to you about.
But Mr. Chairman, that's not money. I mean, when you pay taxes to buy a coin, or you have capital gains tax, when it's not, if you have to settle a lawsuit, it's always settled in depreciating Federal Reserve notes. It's never settled in the real contract. So that's nothing near money. The Federal Reserve is given a responsibility to protect the value of the dollar. That's what stable prices are all about. But we don't even have a definition of a dollar. You know, we ask about the definition of a dollar, and I say, oh, it's whatever it's by. Well, every single day it buys less than the next day. And to me, it's sort of like building an economy and having economic planning like a builder had a yardstick that changed its value every single day. I mean, just think of the kind of a building we've had. I guess over the last 30 or 40 years, I have criticized the Fed on occasion, but the Congress deserves some criticism too. The Federal Reserve is a creature of the Congress. And if we don't know what the Fed is doing, we have the authority, and we certainly have the authority to pursue a lot more oversight, which I would like to see. So although the Fed is on the receiving end, and I think rightfully so when you look at the record, I mean, the Fed's been around for 99 years, almost a few years before you took it over. And 99%, 98% of the dollar value is gone from the 1913 dollar. So that's not really a very good record. And I think what we're witnessing today is the end stages of a grand experiment. We have a debt-based system. The more debt we have and the more debt the Federal Reserve buys, the more currency they can print, and they monetize this debt. And no wonder we're in a debt crisis. It's worldwide. I think it's something we've never experienced before. And I think the conclusion will be a vindication either for sound money, or if you win the argument and say, yes, we are great managers, we know how to do it, we want the credit for the good times, and we want the credit for getting us out of those good times, I mean, I think within a few years, we're going to know. Of course, I'm betting that the market is smarter, commodity money is smarter. Nobody's smart enough to have central economic planning. So I'm anxiously waiting for this day for the conclusion, because reforms have to come.
Dr. Powell and Chairman Bernanke, you're getting along so marvelously. Ms. Waters, we hope you'll continue this cordiality.
Hi, I'm Rex Moore with the Motley Fool, and I've been to a very crowded CES for 8 straight years now. And I can honestly say that there's one thing I'm seeing this year that I've never seen.
So again, just want to share that with y'all. Pretty much, in relation to what we just heard, right, coming out of, so-called quote unquote, Jerome Powell's pie hole, right, as they say in the military, right, shut your pie hole, right, literally listening to him, and now in relation to that, listening to, again, Ron Paul, pretty much just ether the ideal of what, this so-called federal government arm or institution is all about. It makes everything a little bit more lucid all of a sudden. It makes everything a little bit more clear now exactly who are these people and what are they really doing in essence to make so-called quote unquote your life supposedly quote unquote better. Or are they utilizing the opportunity to create all this fake money out of thin air, all this so-called supposed currency value in a way where again, it's not really even benefiting the average, American to the degree where you would think it will be. Right, there goes the bell, guys. There goes the bell. Right. So again, it's more of the same, it's more of the same things that we've already known to a degree, whether we knew about it, intently purposeful or we just learned, in passing, that again, you're up against a system where they need complicit people who are comfortable in just watching things happen, watching their taxpayer dollars go to inconsequential things that not necessarily doesn't make their lives better, and they really get nothing in return besides, well, at least you got a police department that protects you, and at least you got a bank where you can put your money in it. Well, at least you got the EPA that tells you whether or not these chemicals are hazardous or not. Well, at least you got a body, a governance body that tell you your car seat is safe. And seriously, how is your standard of living improving? Right? That kind of conversation, that kind of topic, right? Those kind of scenarios, right? That's the part, right? It's like okay, like what's most important? What's more important than that? Right? What's more important than that? Right? Again, they need complicit people. They need complicit, they need people who are complicit in thinking that they're getting really something, right? That they're getting something for nothing, and they're really getting nothing for a whole lot of something. And I say that because basically what's happening is, again, they're taking the greater good of your retirement money, your taxpayer dollars, and this, that, and the third, again, and putting it in the places that you really have no really true say so on where it should be, or where, and that's how beneficial it could be in making your life a little bit better. Again, this is squarely my opinion based on what I see in terms of fiscal policies, the spending aspect of it, where the Treasury Department is kind of funneling things and moving all this so-called quote unquote debt around. They just kind of shifting debt around, and they're the benefit are those who are in the corporate sector who understands the power of the investment vehicle to utilize the prop of the dollar, the American USD dollar, in relation to other currencies. Number one, all in the forex market, but also in the aspect of the products or services that they're producing, right? In their relation to their competitive values or people who are on the international scene, where again, our stocks again are being propped up by all this fake fiat currency, and the companies are not warranted some of the price aspects, even where they are are also now protected indirectly by your taxpayers' money, and that's as if that's a benefit in itself for you just to be a citizen in America. And for people who do not invest or don't understand about it, how can you feed yourself off the gravitas or the idea that this is so wonderful that you have a system like this? When again, it's being tested now. I'm only saying it now even more so because of the fact that coronavirus came in and exposed a lot of these companies. It came in and exposed a lot of these companies. Exposed the infrastructure, in our hospital care, hospice system. Again, our healthcare system as a whole. It exposed a lot of that. Exposed the CDC, it exposed the FDA, it exposed the WHO, it exposed the NIH, it exposed all these so-called institutions. Exposed all of them. Right? And again, most people say, okay, well, well, at least it's better than being, in a quote unquote skilled third world country. Well, you got to deal with this and deal with this. That. Like, serious, man. Miss me with all that, man. Miss me with that. Right? Spare me these weak arguments or comebacks. When reality is that, again, you can't sit here and prop up things that ain't really giving you the true transparency you need to make good decisions. So, and it seems like I'm just kind of very hardened about it because, again, I know a lot of people that's dealing with this stuff right now, obviously because of this coronavirus, and they ain't got really no, they don't have a backstop. They don't have a backstop. They don't. Right? They don't have a backstop right now. And that's, to me, that's troubling, right? That's troubling. That's troubling, right? They'll have you, thinking that it's, everything is fine and, whatever. I find that to be problematic because, again, there's people who are still waiting to get, their check, right? There's the little so-called stimulus check, right? They're waiting to get their stimulus check. Hold up, sorry. Let me get my little free stop real quick. Get my little free stop. Forgive me, guys. It's stash party time. And nothing else, you need to get a couple of free dollars, right? Let me cut that down. Right. About all things you get, right? You get your little couple of dollars from the stash party, right? About the whole thing we learn how to hustle, right? Get your little bag, right? But again, moving on. Yeah, you got your. I'm sure you already got yours over, Chris. You be on it. Collect that bag, hey. You know what I'm saying? That's how you hustle. That's what you're supposed to be doing. You know what I'm saying? So yeah, just kind of, before we close out, just, everything you've heard today over, Chris. I mean, what's your take on, again, where we are in terms of the feds and, pretty much your outlook on how you see things and, what's your take on, what you witnessed today?
They have no interest in taking care of Americans. So you best to be doing your due diligence on how to make some money. If, you're not planning on going back to work, if you don't, trust going back to work, either take heed to that interview or that speech he made, and to let you know that America does not have your interests at hand, and you need to get into investing and day trading as a supplement, because these people do not care about you. They have their own interests in mind, and that's their companies that they fund continually, because they definitely ain't funding your pockets, your bank account. So you need to find a way or a strategy in how you can acquire some money back from that. No more stimulus. So that was a little slap in the face money. Like, take it in, get away from it. How you feed your begging kid, they won't leave you alone about something, so you just finally give it to them and tell them to go on, get out the way. That's basically what that $1,200 check was. So Don't be dependent on this system or this government. They don't care to feed you or your family. That's up to you to do so. You just heard it. Thank you and good night.
Right. And a lot of that again is detailed through the idea where if you and again there always will be a situation where they say, well, okay, well, again, well, at least you have it better than everybody, other people, and this, that, and third. Again, that's not a reputable argument to produce to people when you know they're being railroaded through the value of what they consider to be what they're doing in terms of paying to it, into the system through taxation, where the benefits are in a justly manner that warrants you to feel comfortable in it, right? To where you can have again a quality of life where what we see obviously in terms of the wealth gap in relation to the poor gap reality, it's staggering. It's not, I mean, it's like night and day, literally. It's so diametric that you would think these are, two different people from two different, planets. And in between, you have again the government that's supposed to be lobbying to make it a so-called quote unquote mandate. We know there's no such thing as a perfect system, but they'll have you believe that it is, right? Every day you listen to Trump speak, you think it is it's a perfect system, right? Because he's in charge of it. Right? But again, the average person ain't benefiting off of it. And then they say, well, it's up to you to pull yourself up by your bootstrap and do all this, yada, 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 this and yada, this and that. Okay, so show me again all this attuned about $3 trillion that go into the stock market. These people, how do these people who had bad fiduciary responsibility, bad governance, corporate governance, bad business practices, how are they pulling themselves up by their bootstraps right now, besides getting a bailout in a loan form that's going to turn to a grant? How did they pull themselves up by their bootstraps? Right? Again, it's a lot of hustling going on. Right? There's a lot of hustling going on. Right? And again, there's no shame at all in the minds of the people. Again, just whatever. Look at you like with a straight face. The same way you saw that smug on Ben Bernanke face when Ron Paul was digging into him with raw facts, and you could tell, right? You can tell that in that moment his party got rocked to sleep for just a small moment in time, his spot got blowed up. And a lot of people didn't even know. Again, the Fed, in that perspective, are just, again, in place to just disrupt the monetary system in a way where they funnel the money into the people who really benefit from it the most. It has nothing to do with the ideal of it just being, okay, it's the Feds and they're supposed to do this and do this, that. It had nothing to do with that. Nothing. Right? It's more of the same thing that we always have witnessed, what we always have learned over time, and how we value this stuff and realize that, the things that we're dealing with, or the people that we're dealing with, quote unquote, right? And it's just more of the same, business as usual, right? It's the business as usual, right? It's business as usual, right? So again, just want to put that in, out there again. Again, you guys have your own mind, and you know how to ration your way through these kind of talking points and things when you're hearing governments and talking points and saying we're doing this, and you can tell that you're not necessarily feeling it. So apparently they ain't doing it; they're just saying it, right? And it sounds good on paper, right? It sounds good on paper, right? Again, paper ain't never fed nobody, right? Again, words on the paper, unless you can again, apply them in a certain sense to some degree, ain't never fed anybody, right? So again, they know the average person has a short memory, right? A short attention span. You're soon to forget a lot of this stuff before it even become an issue where you need to realize how important it is to not forget it, to utilize it in a moment you need it the most. They know people have a short attention span. They know people have a lot of what they call fake outrage for the moment. And before you know it, they're too busy worrying about how to even, do this, that, and the third, even take care of Bill, feed themselves to the point where they've been forgot what they, their overall argument was all about at a time when it mattered most. So the government banks on that. They bank on people being, again, so distracted that they will also in return go vote against their own interests when it's time to really get people in place to do your bidding for you. And if you don't go that route, at least have a system in place where you got people that you can build around, so y'all can kind of build out your own economic structure where y'all can find ways to produce income or revenue or cost a quality of living for other people so they can sustain and live life more or less on their terms, void of a government. Because again, big government is always the worst thing that ever happen in a free democratic society. Not necessarily my words, but the so-called words of the people who so-called founded this so-called country, right? And right now you don't have that kind of that level of so-called you don't have those kind of liberties. It's been controlled. You have a stock market that's been taken hostage of, right? You have a government that's obviously it's pretty much being used as a business chariot, apparatus to make the person who's sitting in it right now look good. They ain't really doing a whole lot, as what people would think, could really be coming out of such a powerful seat like that. Whether you for it or you against it, meaning it was a particular sitting president or not. Again, y'all know me, I don't do none of that mess from that aspect. I don't put my overall livelihood mentality wise in the hands of a so-called another man to that regard. President, whoever. They're there just to do the bidding of people who got bigger money than you. Right? Stop getting confused, right? You ain't getting that out of it unless you got dollars, all right, to determine the direction of where these people need to be mandating policies to affect their livelihood to make it better. Right now, you're seeing the feds do it right now in terms of how they dump all this money, again, into equity assets. Again, per Jerome Powers, not mine. Y'all heard it like I did. He's worrying about the stock market, liquidity, and volatility, so it can continue to just melt up and go higher on no substantial or warranted economic data out there. All the macro data says, this country is in trouble. You're in a micro recession, and they try to convince you that it can do, the market can easily just do, and the economy as a whole can do a V-shaped recovery and go right back to where it was, like it ain't never happened. Meaning coronavirus. And y'all know, like anything, you shut down the business. Every day that it shut down, the amount of money that's lost, the traction that it was gaining in terms of being able to kind of really catapult itself into a higher cadre of business, dealings, this, that, third, lost contracts, lost clientele, all this stuff. It sometimes it takes years to get those things back, years. And these people tell you like all this stuff is gonna bounce back tomorrow like it ain't never happened. That in itself is just again irresponsible in itself to have those kind of talking points at a time like this, when people again are lined up in the unemployment line at the tune of near 30-something million people already, close to that. When the numbers drop tomorrow, it's gonna be over near 30-something, close to 30 million people. Near 30. I think it's already over 33 million. So it'll be near 35, somewhere around 35, 36 million people unemployed. Right? That's pretty much man. That's a good chunk of people. I just leave it at that. That's a good chunk of people. Right. So again, it's just important, guys. Look at that. Good news. There you go. I just saw that, Sister Mo. MRKR just got approved for a multi-tumor antigen. Right. It's probably running right now. Let's go pull it up real quick. Right. Let's go pull it up real quick. Yep, it's running right now. It's up 23%, 23.9% right now in the after hours market. Right now, I got Tesla on me. Let me take Tesla down. We already know Tesla just a pump and dump. No matter what, they probably missed on earnings, and the stock's still up. So we're not going to entertain that foolishness. And if you're in it, again, congratulations, right? Get the bag, right? Get the bag. We're there for the bag and the bag only, right? We're there for the bag and the bag only. Right. Yeah, so MRKR is up right now, as you can see here on this news. Again, thank you, Sister Mo, for dropping it. That's why this business is important. That's why having think tanks like this is important, right? Because you get a chance to utilize again these same things that we always talk about, these investment vehicles, in a way where it can benefit you real quick. So this stock obviously gapped up from 227 and went up and hit like 290 in a matter of I mean, literally, a few minutes here. As you can see, these are 1 minute candles, so literally roughly around about near 10 minutes. Nice little spike up here in the stock here, where again it's up. Just coming where it came from today, roughly around about $2 actually. Yeah, so up near 80% on the day. After hours, it's up again a little bit over maybe 75%, somewhere around there with this extended move. But nice little move here after hours, and if this thing picks up some extra volume here, it's actually up on low volume. This could be a major runner for tomorrow. And I mean, let's pull it back and look at the monthly chart. So the stock obviously been sitting in again, looking at where it kind of gapped up here around I want to say April the 14th, and went in a nice little bull flag here. It bull flagged off this gap up point here, and there we go. Now it's kind of spiking up. Right now, it's got some news to spike up. It's hitting some resistance up here at this point here, roughly around the $296 level. If it breaks above that, man, that could be a nice little gap fill here. As you can see right here, this gap fill here to roughly about 389. Right, you had a spot between 348 to 394. If it can close and get above the $3 handle, excuse me, the $3 handle, this point here, break this level of resistance here, then this could be a magical little runner for tomorrow. Again, got a good little space to hit 348. It breaks that, fills that gap, closes 390. It can really do some damage, right? It can do some damage up to the upside and up another $5-6 a share. At a point where it can kind of cross these levels of resistance here around 508, around here at the 20 moving at around 546, and just take off from there. So right now it's definitely above the 200-day moving average, which this was the breakout that it needed. Look at this price action here. Look at this wedge pattern here. This is textbook. That's a textbook wedge pattern here. From the top of this 200 moving average down here to the bottom of the 20-day moving average down here, how it stayed in this tight little range here, consolidated, built up a lot of volume like a pressure cooker, and guess what it did? It popped up over 75%, in this move off this news. Right, so definitely one you want to watch here. Again, look at going back on the yearly chart. You got some nice airing opportunity up here near the $8 handle. Again, up here around the $6 handle area. It makes up, gets up above that point there. That'll be a nice little spot there to kind of really get some, nice little price action and some airing opportunity going on with the opportunity there. Right, so we definitely got one to watch there. We got some, ones that's already selling off here after hours that released earnings tonight. And then Teladoc is one of them. TDOC, this stock here has just been going up just crazily since the coronavirus. As telework, we call it telehealth work, has now been the new norm now, right? And this stock here has benefited off of it greatly since the coronavirus. And so they released their earnings tonight, and again, reality and gravity has set in, right? So far, at least. In the stock that's been propped up nicely since the coronavirus, and the point where now it's kind of giving back some of those gains as it released its earnings numbers. I think it released the earnings numbers tonight or tomorrow, if I'm not mistaken. But anyway, let's go back on the 3-month chart so you can see exactly what I'm talking about. All right, the 3-month chart pretty much shows you where this puppy has came from. Look at this chart. You couldn't make this stuff up, right? Look at the 3-month chart. Hold up, come on, thing. 3-month chart. Oh man, come on now, don't act up. Now let's do the 6-month chart. Let's see if that looks a little better. Because right now it's not really showing. Come on, Black Boss. I'm telling you, acting crazy tonight. All right, let's try the 1-month chart. Anyway, the chart ain't acting right now. Stuff acts crazy when you need it to work the best, when you need it the most, right? Well, anyway. Again, you can go pull up this chart, Teladoc, where it came from, where it's at right now. Again, stock has been, highly overbought, coming from a place where it was trending, again, a lot lower. Okay, there we go, a little bit better now. Dang it. All right, so again, coming from a place where it was trending down here, let's back it up a little bit. All right, going back to this point here around about $100 a share. All right, about $100 a share. And it went up, hit the highs like $200 off this coronavirus. All this is post coronavirus, or during the coronavirus, but post the coronavirus news when it came out that we was going to be shut in, and the stock just took off because again it was a need to have telehealth companies or businesses in place, right? People couldn't go to the actual hospitals. They had to do a lot of their business, hospice building or business online, I should say, excuse me. And the end result was, again, a company like Teladoc, and there's others too, like Teledyne, and there's a few other eHealth. There's another one, I think the ticker symbol is ETHT, another one, eHealth, where those companies obviously benefited greatly off this coronavirus news. I mean, greatly off that news, right? And so at this point, it was just time for the stock here to, kind of cool off a little bit. And as of now, you can see people taking profit in it. It may not, sit down this low too long, because it might still be an opportunity where people that missed it, big move, come in and buy the dip up and ride it even higher, right? If they really find value in it, that they think it's going to go higher, then this may be a dip buying opportunity. Because again, they act like, from what I've been seeing in the market, like all news right now, whether bad, good, or whatever, indifferent, is still what bullish news overall in the grand scheme of the overall market. No matter what bad news comes out, the market still finds a way to grind higher, right? Typically, when that happens, they call it irrational exuberance, right? So one thing that Warren Buffett talks about a lot, and some of the greats talk about a lot, when that happens, they say that's the best time to kind of pull away from the market, because it's being controlled at that point. Basically, it's being controlled by people who got a bigger interest than what your due diligence narrative may be, obviously operating under the aspect that you're right in terms of fundamental news, but the technical aspect is being hijacked, and they're just buying these stocks up one way or the other, right, left and right. And so again, in moments like that, you have to just realize what you're dealing with, and you have to be safe, right? You have to be safe, right? Again, that's why you got stocks like Tesla that's up, and people are like, well, how can Tesla be up right now? When they really was already on the eggshell in terms of their production value, that they couldn't even really take a week off in their production schedule that will make them, put them back into an unprofitable status. Well, case in point, here we go, right? Again, this is pretty much how this system works. This is how all this stuff works, right? Again, they're finding ways to utilize this market, again, as an investment vehicle, and prop up these assets that are not warranted, but they're just investment vehicles. And so you have to look at it that perspective, right? Remove your emotion, remove your ideal of what you think a company can and will not do. If you don't feel like find the value in it, definitely don't trade it. Don't chase it. Don't trade it. It has to make sense to you, dollars and cents, as I'm always saying, because again, ultimately in the end, when the reality sets in with a lot of these companies, they're gonna crash and burn in most cases, if they didn't earn their so-called keep. It may be a little longer than necessarily needed, right? And it makes no sense that it's just sitting there doing that. But again, you can't fight it, right? There's nothing you can do to really fight it, because again, that you're talking about the tunes of billions and billions of dollars that goes into these stocks every day by these banks and these hedge funds and these groups of people who have a bigger agenda than yours. Then again, you do better just by staying out of it. You do better just by staying out of it. It's just not worth the risk. Right? It's not worth the risk. Right. So again, just something to keep in mind. But either way, again, if you in these stocks for the long term, you got long-term position, then definitely revel behind the idea that you did, good at getting in at a good, low price. Obviously, I know I got Tesla shares in the long-term scenario. I'm in roughly around about I'll say around about 360 something, 370 to 360 something. I got the shares of Tesla at that point. But even up here at these prices here, again, obviously, you would be excited to want to see it up here, but it's still garbage, because it doesn't really warrant it. And so again, at a point where it can come down, now it came down and hit the lows around about near 400 off that big March pullback. Yeah, that was a good dip buying opportunity, right? Again, it's a cult stock. You know what you're dealing with. It's a cult stock. A lot of people who buy it love it because of the company and the CEO, right? Not so much the fact that if they're just a highly profitable company and they really dropping it like it's hot and all that kind of stuff. That really got a good balance sheets and good good forward value in it, and which you can say that they do, obviously, because again, electric vehicles obviously, but again, they got a whole lot of things they got to deal with before they really get to that point of comfortability. But beyond that, the stock is still again just running rampant. It's just doing whatever it want to do, right? It's just doing whatever it want to do, and then nothing you can do about it, right? Because again, people who like Goldman Sachs, JP Morgan, and all the other companies are just when I say those companies, those people are just propping them up again. And a lot of it is obviously based on the fact that they borrow all this money from the taxpayers through this coronavirus stimulus stuff, and they're just pumping anything because again, it's not their money, right? I mean, they literally got to go ahead and just, have free will and free reign, right? And just buy any and everything, right? Any and everything that they can get their hands on through the liquidity of the reverse repo operations that are happening through the Federal Reserve, giving these banks to go ahead and go out there and do just that. And then the banks also report to who? To the hedge fund, to these different fund managers that buy into these banking systems as a proxy to help them get that liquidity out. So that's how they know about these things ahead of time before you even know about it. And they just start positioning themselves, getting in a little early, following the breadcrumbs of the money, and next thing you know, they end, and making a killing, making a killing. And you're like, well, why is the stock going up when it should be coming down today? Well, because they're front loaded and the stock is pregnant, and you don't really have enough sellers to mandate the stock to come down at this point, because all the people who came in had bigger money and they hold their shares because they waiting for a bigger move to happen in the stock. Right? Again, it's just one of the oldest hustles that we've learned to recognize now in the markets, how this stuff really works, right? How it really works. Right? And so we're learning and we're getting better day over day to be in a position again where we can be a little bit more sharper as technicians and tacticians, and learning how to uncover the data, read up on the metrics, understand how this stuff really favorably works towards people who know how to utilize it at their advantage. And again, it's a process. Again, don't look at it as if you're going to get it all in one night, right? Take your time. Realize it's a wealth generating income producing this machine by all intents and purposes. It is. I'm not going to say it's not, right? But again, knowing how to deal with all the the hoopla and the fluff and all that, that's the part of it that's priceless. All right. So again, as I'm always saying, follow the money. Right? Follow the breadcrumbs, follow the money. Right? Follow the breadcrumbs, follow the money. Right? Another one, a line, right? A Invisalign, right? The company that makes the little Invisalign bracelets. Bracelets for your teeth. Look where it's at right now. Right? You would think that company be banging right now, right? But again, people can't get to the dentist, I guess. And because I think this company, you have to go in and see an actual dentist, unlike Smile Direct, where they do all your stuff pretty much online. This company here, they started to feel the weight of it. It's pumping up because it's been propped up for a good little minute. This one here been up, really high. And look where it came from. Again, just before even the coronavirus news hit. Let's back it up a little bit. All right, let's back it up on the yearly chart. Again, it's coming out of last year, and it was roughly, around 209, and went up here and hit a high, rough around about what, 296. That's almost $100 in that perspective. Pull back, and now went up a little higher off the rebound off the March lows. Hit some key resistance up here near the swing day moving average, and now it's going to pull back a little bit here on earnings report. Right, they released their earnings numbers tonight. All right. So again, there's a lot of stuff that we need to keep our eyes on. Again, I'm not going to keep you guys any much longer at this point, so I'm going to get up and make some moves here. But I did want to again have the ability to come on live, share a little bit of what we kind of experienced today as far as the FOMC meeting, things of that nature. Talk our way through it a little bit here. Bring some perspective to it, as we always like to say. And then again, transfer from this point. And we're getting ready to go live on the other channel, right? It's Urban Economic Empowerment Show this week, right? So definitely you have a chance. So let me get the link. So you guys can, when you leave here, you can go right on over to the Dagger Squad channel, where we'll be having the Urban Economic Empowerment Show, headlined by awesome illustrious sister Monica, Edie Monica in the house. Right, she did a phenomenal job last night. If you guys missed her on the I think Sarnetta channel, she was on a nice little panel with Brother Jabari and the sister. I forgot the sister name. Is it Nepal or Kapal? I don't know. Forgive me if I'm butchering the sister name. But like always, Sister Mo always comes in and drops some really, really great knowledge. Right. Again, sister is a jewel in the community. Definitely go subscribe to her YouTube page. I'm always telling you guys that for a reason, because you won't go wrong if you subscribe to that sister channel, right? She's a wealth of treasure trove of knowledge. So subscribe to her actual, YouTube channel. Let me like her name so y'all can know exactly who I'm speaking about, right? So y'all can go right on there and like her channel. And again, you will not be disappointed in terms of the knowledge that sister has. So, but that's it, guys. So again, I'm not going to keep you guys any longer. Again, I appreciate you guys stopping by today. Peace, Power, and Profit. Again, we got some good information out of that little FOMC meeting by the Federal Reserve today. Some really good, interesting points of we say knowledge discovery, right? Because knowledge discovery is always a good thing, because you get a chance to look at business and all these different things in so many different lights, where you can see how things are positioned and ran and set up and monitored, that affects your everyday life, right? In terms of this government, right? This so-called government that people are going to fisticuffs over these days, whether or not you love or like it or whatever. Whatever. I'm indifferent and impartial to all things. In the essence, where I need to be very open-minded, right? I need to be very observant and open-minded. I'm not jumping on no bandwagon. I ain't vouching for nothing unless I know it to be a solid track record of producing good results. And so I say this, the same to you guys. Just be cautious out there. Make your own decision based on your due diligence, right? Let your due diligence lead you to knowledge in a way where it can make you, again, feel confident and comfortable, and knowing that you're exhausted all the natural mental resources to get the best answer, to make you feel whole about your experiences and what you see in terms of, asset producing income scenarios, government, whatever the case, health and wellness, whatever the case. Just again, do your research, right? Keep doing your research, guys. Again, I appreciate our village. So again, it's an awesome experience. So tune in tomorrow. Again, I'm gonna try to go live again tomorrow. That's my goal, right? I got a couple other things I want to share with y'all tomorrow, because I had a documentary, somewhat of a documentary, but it's more of an audio book that YouTube will not let me upload. So I got to go around the back door and get it on here. Right? They hit me with a copyright claim. It didn't put a strike on my channel there, just that, it was copyright. They blocked it. So I got to go and find one of the offbeat, off the beaten path versions of it and re-upload it that way. And we'll still get the information out there, right? Because, y'all know how this stuff go. We're utilizing all these platforms to be able to give us information or to give us briefings on how to better preserve ourselves and build ourselves up through, capital values. Again, being able to produce income and things of that nature. That's the only reason I'm on Facebook, Twitter, Instagram, any of that stuff. I don't care about none of this stuff in terms of an entertainment value. Trust me when I tell you that, guys. Trust and believe when I say that. I don't care about none of these platforms. If I can't use them to benefit myself and others, then I don't care about them. Right, so I use them for just what they are. I'm using them the same way they're trying to use me. Right, I play the game where I'm supposed to be played. Right, you're not gonna have me sitting there trying to vouch for no internet, for no Facebook, for no people saying you on the man platform talking trash. You darn right I am. Why wouldn't I be? And that's the weakest argument ever to bring to somebody. You're supposed to utilize it for that reason. Again, people have mixed up talking points, but anyway, I'll leave that alone. Another story for another day. Use what you got to get where you need to go, basically. Right? That's what it's all about. Right? Shots fired a little bit, but I know it's all in the value of knowledge building. But I just want people to be solid and knowing, that's what we're here for. We're here to benefit, right? Through information in a way we can help us all. All right, guys. So let me get out of here. Right? I'm ran my mouth enough. Over, Chris, any last words? Over. Thank y'all for stopping by as well, everybody in the back chat too. Again, you guys are welcome here anytime. Right? Thank you all for coming through today. All you guys are awesome. This is much of your platform as much as it is mine, because I don't own it anyway, right? It's owned by Google, right? So I don't own it anyway. So I can't even claim it. All right. So I'm just utilizing like everybody else. All right. So it's ours, right? Let me put it that perspective. It's ours, right? Our YouTube channel. All right. Yes, over, Chris. Any last words, family, on the way out?
Stay vigilant. And just try to get better every day. It's a marathon, not a sprint. That's it for me. Peace.
Thanks. Thank you, over, Chris, as always, man. Can never say enough. I appreciate you every day you come on, man. Again, that's how you get this up and you learn it and you expound on it and you build within your village mentality where everybody come together and put our brain cells together and figure things out. So I love it, man. So keep doing what you're doing as well. Go if you haven't had a chance. I know you're trying to build your channel out too, over, Chris, but Again, take the time, go subscribe to that brother channel. All you guys, again, if you're starting to produce some content out there, if you want to start utilizing like Facebook and YouTube, if you just want to, not you have to, build your little channel up. Again, I'll be the first one to subscribe to you, number one. Because, again, I understand and utilize what this is all about in terms of what we're trying to produce. Because if you get in these kind of, aspects of information or talking points out, then this is good information, right? Let's just be clear, right? You're showing people basically what's happening, right? You're showing people how the game goes and how they can benefit in it. Then, I mean, that I'm there. I'm not going in. I'm there. All right. So that's just
appreciate you, Oba.
I appreciate you, family, always, and everybody back chat. Over T, right? Over Sunline, right? My family, GPJ, thank you, family. Ilba Monica, thank you, sister. Thank you, Sadal Samuda, thank you for coming through today. Hotel family, right? Let me see who else in the back chat. My family, Rich Black, man, thank you for coming through today, family. Peace, power, profit, man. Hey, I appreciate you, man. I appreciate you guys. Always. Yeah.
Village mentality.
That's it. That village mentality. That's what we have here, guys. It's why it's important. I love it. And again, I support you guys. Anything y'all doing too. Just make sure you drop your information in the back chat or come on the live panel and speak about it. I'm there. All right. My family, Jerry Pullett. All right. Thank you for coming through, family. I see you. All right. Over Brandon. Thank you for coming through. Over as always. Peace, power, and profit, family. Brother Mathis. Thank you for coming through, family. Peace, power, and profit to you as well. Let's see what else we got. We got Sister Beautiful One came through. Thank you, sister, coming through as always. All right. Who else we got in the house? We got a few more people. Brother Raul, definitely Brother Raul. Thank you for coming through always, family. Always appreciate you. Always appreciate you. Right. We got who else we got in the house came through that I might have missed. I think we got pretty much most of everybody. Again, hit everybody, Brother Tegan, everybody. If I miss again, don't charge it to my heart. The charge that I might have been tired.
Right.
Brother CG3 in the house. Thank you for coming through, family. And everybody else. And again, I look forward to speaking to you guys again tomorrow. Until then, again, keep your mind fresh on knowledge. Keep your mind expanding within the knowledge of investing values, and let's take the financial literacy village to the next level, guys. So until then, Uncle Josh Neb, Shim Hotel, and I'll see you guys in the next live. Peace, power, profit, everyone.
Peace, power, profit.